Students, can you hear my voice? Is audio and video clear? Is there any disturbance, students? Should we start the session? Okay, so perfect. Yes, everybody is there. So let's start the session, students. Hello, rockstars. I hope you're all doing amazing. I hope you're all excited for today's session. So with all your excitement, all your energy, let us start today's session of SCMPE Shield. We are discussing the chapter decision making. So what all we had discussed yesterday, students? Let's quickly have a recap of what all we had discussed yesterday. So which was the chapter that we had begun? We had started the chapter decision making. So we had discussed concept 1 basic concepts. In that, firstly we have told the basics of marginal costing, next the basic formulas, next is the relevant costing technique. Concept 1a, basics of decision making. What have we told? Decisions should never be based on total cost. Decisions should always be based on the concept of marginal cost. How do we take a decision, students? We compare our marginal cost, compare it with marginal revenue. Marginal revenue is higher, we accept the decision, but marginal revenue is lower, we reject the decision. Next, we have told what all is included in marginal cost. We have told marginal cost includes the variable cost. It also includes the specific fixed cost or the additional fixed cost. Marginal cost also includes the opportunity cost. Yes, so three components of marginal cost: variable cost, specific fixed cost, and opportunity cost. Next, we went to concept 1b, that is basic formulas. First, we begin with the concept of contribution, that is how much net cash I am getting in my hand. It is sales minus variable cost. It is also fixed cost plus profit. Next, we went to variable cost ratio, PV ratio. I have told sales of 1000 rupees. I can bifurcate it telling my variable cost is 600, contribution is 400. Variable cost percentage is called variable cost ratio. Contribution percentage is called PV ratio. We add the two, it will always be 100%. Third item, break even point. It is a situation of no profit, no loss. That is, my total sales is equal to my total cost. That is, my contribution is equal to my fixed cost. How do I arrive at my break even point, students? Yes, to arrive at my break even point, yesterday's example, I wanted to recover 10,000 rupees fixed cost through my contribution. By selling every shirt, how much I used to get? 400 rupees. So how many units should I be selling? 25 shirts I should be selling. It is 10,000 divided by 400 per unit. Break even point in terms of units is fixed cost divided by contribution per unit. Again, break even point in terms of rupees, it is fixed cost divided by PV ratio. Next, we have discussed margin of safety. What is margin of safety? It is the sale in addition to BEP sale. So whatever is the sale we are making after BEP sale, that is going to be my margin of safety. I've told till BEP sale, whatever the contribution we get, it will be equal to fixed cost. From margin of safety, whatever is the contribution we get, it will be equal to our profit. Next, we have discussed sales to achieve a desired profit or loss. Yes, suppose I want a profit of 2 lakh rupees. Yes, contribution of 2 lakh is not sufficient because I have to pay my fixed cost of 10,000. So how much contribution is required? Yes, I want to recover my fixed cost as well as earn this profit. So I want a contribution of 2 lakh 10,000 rupees. That is, the desired contribution is equal to fixed cost plus the desired profit divided by PV ratio or contribution per unit. You get the desired sales. And the final thing was differential formulas. Yes, two important observations we had seen. First, change in variable cost is equal to the change in total cost. Why? Because there is no change in fixed cost. Second observation, change in contribution is equal to change in profit. Why? Again, because there is no change in fixed cost. Based on that, we have developed the differential formulas. When two different levels of output is given, PV ratio, it is the change in profit divided by change in sales into 100. Variable cost ratio is the change in total cost divided by change in sales into 100. Is it clear, students? Any doubts? We are just having a recap of what all we had studied yesterday. Yes. Next we went into the third concept, concept 1C, relevant costing technique. What did we tell students? Every decision should be based on the concept of a relevant cost. We are seeing what is the cost that is relevant to take a decision. That is, that cost is incurred only if we take that decision. Otherwise, that cost will not be incurred. So, two conditions for a cost to be a relevant cost. Firstly, it should be a future cost. It should be incurred in the future. It should not be incurred in the past. If it is already incurred, it is obviously not a relevant cost. And second, it should be a differential cost. That is, the cost should be different for different alternatives. I select alternative A, the cost is different. Alternative B, the cost is different. Yes, again we tried understanding it with the help of a practical example. Yes, suppose our hero, Mr. Amanda from Uganda, wanted to go on a date. Yes, what all costs are going to be relevant? Purchasing of a new shirt. Yes, going for a facial. Then buying a watch. So many examples we have seen. Yes, so after that, in relevant costing technique, we had seen 4 important points. What were those 4 important points, students? Yes, first one was, let me just open the notes. Yes, different costs and their treatment. First one was historic cost, sunk cost, committed cost. It is already incurred in the past. It is already incurred. So whether I take a decision or not, that cost is already incurred. So it is irrelevant for decision making. Yes, next cost is going to be fixed cost or fixed overheads. Yes, generally we know that fixed cost will remain constant, but there might be cases wherein we are incurring some additional fixed cost. So the moment we are hearing fixed overheads, we need to ask what kind of fixed overhead is it? Is it the allocated overheads or is it the additional overheads? Allocated overheads, common overheads, recovered overheads, absorbed overheads, all are the existing overheads. So it becomes irrelevant for decision making. But the additional overheads, I am incurring extra to take this decision, it is going to be relevant for my decision making. Third one is going to be the opportunity cost. What is opportunity cost? It is the maximum contribution foregone by rejecting alternative options. It is also relevant. Again, it is not an actual cost, it is a notional cost, but it is always relevant for decision making. Fourth one we had discussed was out of pocket cost or additional cost. The additional cost we are incurring in order to take a decision. This will also be relevant for decision making. Is it clear, students? Any doubts till now? Yes, next one, final point we had discussed. We had discussed the relevant costs for material, labor, overheads and machines. In that, for material, what is going to be the relevant cost? We had discussed. Let us revise. I will explain it one more time. Next, we will proceed ahead. Yes, for material. Yes, we had given you the example. Suppose I am starting pen drive classes for CA final. So, pen drive is the raw material I am speaking about. Yes, there could be 2 different scenarios. Firstly, raw material is not in stock or raw material is in stock. Raw material is not in stock. Yes, so if I want to start my CA final class, what I need to do? I need to buy the pen drive. I need to purchase the pen drive. So purchase cost will be relevant. So if raw material is not in stock, purchase cost is going to be relevant. Raw material is in stock. I ask my employees, they are telling pen drive is already there. So I ask, is there any use? Is it regularly used? They are telling, yes, at present we are using it for CA Inter. I am telling, don't worry. Now do one thing. Give it to me for final. For CA Inter, buy it tomorrow. Buy one more pen drive tomorrow. What I need to do? Because it is regularly used, I need to replace the said raw material. Because it is regularly used, I need to replace the raw material. So replacement cost is going to be relevant. Raw material is in stock and it is regularly used. Replacement cost is going to be relevant. Now, third scenario, raw material is in stock. I ask my employee, do we have pen drive? Yes. I'm asking, are you using it? They're telling no, it was of no use. Yes, so I'm asking, what are you guys planning to do? We were planning to dispose it off. We were planning to give it to scrap. So I asked how much you would have got. They're telling, yes, if we gave it to scrap, we would have got 300 rupees. I'm telling, don't worry. Yes, that is going to be my relevant to cost. The realizable value. Yes, if I'm not starting CA final class, I would have got that 300 rupees. But now because I am starting my CA final class, I am using that pen drive. That is why I am not in a position to sell it off to scrap. So this 300 rupees, that is the realizable value, is going to be relevant. Other point also I had told, yes, if the raw material is in stock and it is not regularly used, we have two different options. One is to sell it off as scrap and arrive at the realizable value NRV, or if there is any alternate use for that, we will see if there is any alternate use. Yesterday we had told, yes, the same pen drive, one DVD person was telling, yes, I will load movies in that and give it off to college students. I'll be selling it for 700, we will share the profit 50-50. So if I had sold my pen drive to scrap, I would have got 300 rupees. If I give it to this DVD person, yes, the person who is selling movies, I will be getting 350. What I would have done? I would have sold it to the DVD person, yes, and got my 350 rupees. So now this 350 rupees is going to be relevant. So what is the relevant cost, students? It is realizable value or benefit from alternate use, whichever is higher. Is it clear, students? Any doubts till now? Should we continue? Yes, one final time. Yes, just reminding you of the points. Material not in stock, purchase cost. Raw material is in stock and it is regularly used, it is the replacement cost. We need to replace it. Raw material is in stock, not regularly used. I would have sold it off to scrap. So it is the realizable value or benefit from alternate use, whichever is higher. Is it clear, students? Now let us have a look at few additional points here. Few additional points have been written. First one, purchase price and replacement cost are generally one and the same. Yes or no? Purchase cost and replacement cost are generally one and the same. Raw material is not in stock. What I will do? I will purchase it today. So the purchase cost. Raw material is in stock. It is regularly used. What I need to do? I need to replace. What is the meaning of replace? I need to buy a fresh raw material today. Again the purchase cost itself. So whether in the question, yes, question gives you purchase price, question gives you replacement cost, both are one and the same. Is it clear? Yes. Next, book value of material, that is the historic cost of purchase, is sunk cost and hence irrelevant for decision making. What is this, students? Book value of material. At what price I had purchased the material? At what price I had purchased the material previously? Yes, what price I had purchased the material previously is going to be irrelevant because that decision is already taken in the past. It is a sunk cost. Yes or no? It is a sunk cost. It is already incurred in the past. So it is going to be irrelevant for decision making. Say for example, I am going to tell you this calculator. Yes, I purchased it in 1947. At that time, I paid 10 rupees for the calculator. Just imagine, just assume. Okay. Yes. Now, you as a friend of mine, you want this calculator. You are telling, yes, bro, or whatever it is, I want the calculator. So I tell, okay, I am going to give it to you. Yes. So you are telling, I'll ask how much you are going to pay. He's telling, you purchased it at 10 rupees, right? So I will give you 10 rupees. Is it how calculations work? No. What I will tell, see, if you want it, I will give it to you. But if I give it to you, I need to purchase a new calculator today. To purchase a new calculator today, I have to pay 250 rupees. So you give me 250 rupees, I will give this to you. Otherwise, I won't give it to you. So at what price we had purchased in the past, what is the price lying in the books? That is going to be irrelevant for decision making because it is a sunk cost. Is it clear, students? Yes, write it down in the chat section. Yes, what is it? Book value of material, historic value, yes, is going to be sunk cost. So it is going to be irrelevant for decision making. Now, the next point, for non-moving material which is in stock. Yes, non-moving material is there in stock. What am I telling? Yes, I have a raw material which is in stock. I am having it, but is it regularly moving? No, it is not regularly moving. It is not regularly moving. So what all points I need to keep in mind? Yes, how do we arrive at relevant cost, students? It is a realizable value or benefit from alternate use, whichever is higher. So look at this. If data about alternative use is not available, then we will be considering only realizable value. True. Suppose I am telling, yes, I had purchased this calculator. There is no use of this calculator today. So I am thinking of selling it off. So if I have two options, I will consider. Suppose I can tell, yes, I have option number one, I can give it to scrap dealer who will give me 100 rupees, or else from this I will use these panels and do something else. Okay, XYZ, from which I will get a benefit of 150. I will tell, I will go for this. But if alternate option itself is not available, then what I have to do? Obviously, I have to give it for scrap. So if in the question details about alternate use is given, we will consider. But if it is not available, we will be considering the scrap value only. Is it clear, students? Just give me a minute. I have to put my laptop for charge. Just 10 seconds, students. Is it clear? Now, one final point is, if cost is incurred to dispose the non-moving material, then cost of disposal is reduced to calculate the relevant cost. What is it trying to tell? Yes, look at this. I have a raw material in stock. It is non-moving. Still now what I was telling, okay, it is non-moving, but what I could have done, I could have given it to my scrap dealer. Yes, I could have given it to scrap dealer. He would have given me some money. Where is our money box? Yes, normal scenario. What I'm telling, yes, this raw material, yes, it is in stock. It is not regularly used. What I will do, I will give it off to a scrap dealer. What will he do? He will give me money. He will give me 100 rupees. So that is going to be my relevant cost. But in some cases, if we have some hazardous chemicals or any item which is going to have an adverse impact on the environment, so what we need to do? Yes, no scrap dealer is going to buy it for free. He's telling, I won't give you money. You should give me 1000 rupees. You're asking, I should give you the material, I should give you 1000 rupees. Yes. Why? Because as a business, I have the responsibility to ensure that these resources are disposed of properly. So to ensure that these resources are disposed of properly, I have to pay. Till now what I was getting the money. Now I have to pay. So when I was getting the money, I was getting 400 rupees. I have shown 400 rupees as my relevant cost. Now I am paying the money. What I will do? I will show 400 rupees negative as my relevant cost. Is it clear? We'll explain it one more time. Look at this, students. Now example, I have a highly toxic chemical in my stock which is non-moving. I had purchased, now it is not moving. Now what I am planning to do? I am planning to sell it off. I went to a scrap dealer. Yes, I give it to him. I am telling, yes, will you, yes, take it off. So he's like, okay, we'll buy it. I am asking how much you are giving me. He's telling, I am not giving you. You should give me 400 rupees. So to dispose this off, you should give me 400 rupees. So what is my relevant cost, students? 400 rupees negative. 400 rupees negative is my relevant cost. Yes. So I will try explain it further. Okay. Suppose I have this raw material with me. What options I have? Either I give it to a scrap dealer. What is he telling? You have to pay me 400 rupees. Now, there is another friend of mine, okay, who wanted this raw material. He is telling, yes, will you give me this raw material? Yes. I tell, I will give you this raw material. He is telling, I won't give you any money. I am telling, okay, no issues. Why? Because, yes, if I am giving it off as scrap, I have to pay 400. Now I am saving this 400. Yes or no? So this relevant cost is going to be negative 400. Is it clear? So if we are incurring cost to dispose the raw material, the relevant cost is going to be negative. Whatever is the cost of disposal, that is going to be negative. Is it clear, students? Should we continue? Okay. With this, we've finished the relevant cost of raw material. One more time, let us try revising. Yes, raw material. We are calculating the relevant cost for raw material. First, we are telling if raw material is not in stock, we need to purchase. Purchase cost is relevant. Raw material is in stock. It is regularly used. I need to replace. Replacement cost is going to be relevant. Purchase cost, replacement costs are generally one and the same. Yes, it is in stock, but it is not regularly used. Then I will tell it is going to be my realizable value or benefit from alternate use, whichever is higher. Yes, if there is no benefit from alternate use, I will not consider. If to sell off my scrap, I have to incur cost, I have to incur cost, I have to incur cost. What am I going to do? I am going to reduce it from my relevant cost. Is it clear, students? Yes. Now, next we are moving into labor. We are going to calculate the relevant cost for labor. It is okay. Let's understand it from here itself. Now, we are continuing the same example. What was the example we had created? I am planning to start CA final costing classes, SCMPE classes. For that, I am calculating the relevant cost. For raw material, I have calculated. Now, for labor, I want to calculate. Yes, I am looking at the employees. I call one of my employees and ask them, whether there is some spare time available for sufficient employees. They are telling no. Sir, the employee who is there is very busy with the existing work. For CA final, you have to hire a new employee. You have to hire a new employee. You should get a new employee. So what am I trying to do? I'm trying to get a new employee. I'm trying to get an additional employee. I'm trying to get an employee on casual basis. So if I'm doing that, what I need to do? I need to be paying him the wages, right? Wages plus whatever the benefits I'm going to pay him. That cost is going to be relevant for me. Is it clear? See, if I don't take CA final class, should I hire this new employee? No. Should I incur the cost? No. But if I start taking CA final class, do I need this new employee? Yes. Should I pay him the wages? Yes. Should I give him the benefits? Yes. So wages includes all the benefits payable. We have told, yes, labor cost includes all the wages, taxes and the benefits payable for employees. Whatever is the amount I'm incurring because I'm taking this decision is going to be relevant for me. Is it clear, students? Look at this. For labor, if I am getting new employees, additional employees on temporary basis, I'm telling just come for 1 month. After that you can go. I'll give you 10,000 rupees per month. Yes, or any casual employees, then the relevant cost is going to be the wages paid. Whatever is the wages I've paid is going to be relevant. Is it clear? Yes. Now, what I'm telling, yes, I asked the employee, do we need a new employee? He's telling no. Sir, we have one existing employee. Yes, we are getting the work done from our existing employee only. There is an existing employee who is taking care of CA intern. Yes, again there could be two different scenarios. First, there is some spare capacity or there is some excess capacity. What does it mean? Yes, we have one employee for CA intern. Okay, who's handling all the doubts, all administration related activities. Now, there are very less inquiries for CA intern. Again, there is not much work to do. So in a day of 8 hours, that employee will be free for 4 hours. Yes, he or she will not be doing anything. They'll be scrolling through their Insta or doing something. Yes, they are free. And they are my existing employee. So I'll tell, anyways, they are free for 4 hours, right? Let us give the work to that person. Are we going to incur any extra cost, students? Yes, from my existing employees, I'm getting the work done and there is spare capacity, there is excess capacity. Am I giving anything extra to them? No, I am not giving anything extra to them. Yes, before when I was not taking CA final classes, when I had only CA inter classes, per month I was paying them 15,000. Now when I've started CA final classes, still I'm paying them 15,000 only. So whether I start CA final class, I don't start CA final class, the wages I'm going to pay them is going to be 15,000 rupees only. So relevant cost is going to be nil. Is it clear, students? Yes, believe me, you can create everything by yourself. Just ask this question. If I take the decision, what will be the cost? If I don't take the decision, what will be the cost? If there is a difference, whatever is a difference is going to be a relevant cost. If there is no difference, relevant cost is going to be nil. Is it clear, students? Now, I am getting the work done from my existing employees only, and labor hours is in shortage. That is, there is no spare capacity. Then what is going to be relevant, students? Yes, the relevant cost is going to be the wages plus the opportunity cost. Yes. So first, let us try remembering the things. This one will explain to you again. In terms of employees, if I am getting new employees, the wages paid is going to be relevant. If I am getting the work done from my existing employees, I ask if spare capacity is available, if my employees are free. If my employees are free, obviously relevant cost is going to be nil, because before also I was paying them 15,000, now also I am paying them 15,000. But if labor hours is in shortage, that is, there is no spare capacity available. Yes, my employee, CA inter employee was working for full 10 hours in a day. Yes, now I am giving CA final work also. Yes, he or she is telling, how can I do this, sir? I tell, for some time, you ignore CA inter. Now focus only on CA final. So what will happen? Because she has ignored CA inter, we might lose some revenue, some profit from CA inter. So that opportunity cost I need to include. And at the same time, whatever is the wages I am giving here, that also I need to include. Is it clear, students? Yes. Yes. Now look at this. This will explain it even more. Yes. If you think of this logically, you should be having one small doubt. Is that doubt running in your mind? Yes, opportunity cost is fine. Yes or no? Opportunity cost should form a part of relevant cost, because we are using the existing employee, because he is sacrificing that work. Whatever is the profit lost as a result of that, it should form a part of my relevant cost. But why am I including the wages given? Think of it, students. He is my permanent employee. Yes or no? I had that employee at the start of the month. Now, when I was taking only CA inter, that time also I was paying 15,000 wage. Now, when I've started CA final, still I'm paying 15,000 only wage. Then why am I including this wages cost as a relevant cost? Think. Yes. Yes, Hamna has asked the question. Yes, others have also asked. That's amazing. Yes, recorded students, think of this. Yes, there is no use by hearting the things unless you know the things conceptually. Now, look at this. Why are we including the wages also as a part of relevant cost? Now, look at this. Suppose I am telling, yes, we are running a business of manufacturing shirts. At present, what am I doing? Yes, I am manufacturing shirts. Yes, but now, what am I thinking? I am thinking, let me get into jeans business as well. Let me start jeans business as well. Now, because I am starting jeans business, yes, my employees had no spare capacity. They were working full time. So now I am telling, yes, do not work on manufacturing shirts. Instead, you manufacture jeans. So what is happening? Obviously, whatever the contribution we were getting from manufacturing shirts, we are losing that. Point number one. So opportunity cost is going to be relevant. Now, why wages is going to be relevant? Let us try to see this. Now, what is the contribution I am getting from manufacturing and selling a shirt? Look at this. My selling price is going to be 1,000 rupees. Yes, what all variable cost I have? I have my variable cost of 200 rupees, material cost of 200, labor cost of 300, variable overheads of 250, So my total variable cost is going to be 750. So my contribution is going to be 250 per unit. Is it clear? Now, assume that this employee was a casual employee or a temporary employee who was hired only for this particular job. We are telling him, yes, you come, you manufacture a shirt, I am going to give you 300 rupees. As simple as that. Then see what is going to happen in terms of the cash flow. Yes. Firstly, the moment we sell, okay, before we sell, we should manufacture. Okay. To manufacture, we want a direct material. What is the direct material cost, students? 200. Yes or no? The arrow should be changed. Yes, 200 I am paying direct material. For wages, 300 I am paying direct labor. For variable overheads, 250 I am paying. So 200, 300, 250. Altogether, how much I have paid? 750 I have paid. Now shirt is being produced. Now I am selling. How much I am getting, students? How much I am getting? 1000 rupees I am getting. How much net cash is there with me? 750 I have paid, 1000 I have received. The net cash, the contribution which is there with me is going to be 250 rupees. Is it clear? But look at the second scenario. I have a permanent employee for whom I am paying 10,000 rupee per month. What does it mean? It means that whether we manufacture shirt, whether we manufacture jeans, whether we do not manufacture anything, still I have to pay him 10,000 rupee per month. Is it clear? Now, firstly I am considering labor cost. I have to pay 10,000 rupee per month irrespective of whether I manufacture shirt, jeans or I don't manufacture anything. Now, for a moment, assume I am manufacturing shirt. Okay, to manufacture shirt, specifically to manufacture shirt, now what all cost I need to incur? Whether labor cost specifically I need to incur? No. This is incurred whether I manufacture shirt, whether I manufacture jeans, whether I do not manufacture anything. Specifically to manufacture shirt, what all I want? I want a direct material for which I am paying 300 rupees. Direct labor, what was this direct labor cost? In CA intergrade study, the total labor cost which we are going to give to our employees, we try to calculate it on per unit basis based on time and motion study, not getting into all of that. Based on that, we got 300 rupee per unit. But ideally, is to manufacture this one shirt, I am not paying him 300. This is just a distribution of cost which I have done. Okay, so direct material cost was 200, I guess. Yes or no? Yes, it was 200. Look at this, students. For my employee, I am paying 10,000 irrespective of whether he is manufacturing shirt, jeans or whatever it is. Now I am thinking, if I manufacture shirt, net how much cash I will have? To manufacture shirt, yes, specifically to manufacture shirt, I have to pay for direct material. How much I have to pay? 200 rupees. I have to pay for variable overheads. How much I have to pay for variable overheads? 250 I have to pay. So total how much I need to pay? Total I need to pay 450. As against that, how much I am getting by selling a shirt? I am getting 1000 rupees by selling a shirt. Look at this, students. Yes, whether my employee manufactures shirts, jeans, doesn't manufacture anything, 10,000 I have to pay. Let me ignore it. Specifically, if I manufacture shirt, I should purchase raw material. I am paying 200. I should pay for variable overheads 250. So I have paid 450. I am getting 1000. Net how much cash is there with me, students? Net, what is the cash I am having? It is 550 rupees. What is this 550? Can I tell? It is nothing but the wages cost and the opportunity cost. The wages cost of 300 and the opportunity cost of 250 is what is this 550? That is why if you have permanent employees and there is no spare capacity, you are sacrificing, then not just the opportunity cost but wages is also relevant, because if you are manufacturing the previous product, not just your contribution but your wages cost also you would have got in cash. So now if you are manufacturing this product, bare minimum 550 you should be getting. Is it clear? Yes, this is the logic of why to include direct wages. Yes, include direct wages plus opportunity cost, everybody is going to tell. But everywhere, at every point, I want my students to keep asking the question. It's not what we are going to do, it is why we are going to do it. The day you realize why we are doing it, believe me, everything becomes plain simple. You need not by heart a single thing. Is it clear, students? So this was logic at the next level. So once we have understood the logic, next time onwards, it is just a matter of revision, cumulative revision. Now for employees, we are going to tell what kind of employees. Are we hiring new employees? If we are hiring new employees, whatever is the wages we are going to pay is going to be relevant. If we are getting the work done from our existing employees, we are going to firstly ask, is there any spare capacity? If there is a spare capacity, we are not sacrificing anything, so the relevant cost is going to be nil. If there is no spare capacity, labor hours is in shortage, so to do the work, what my employee has to do, he has to sacrifice the product which he is manufacturing now. So the opportunity cost as well as the wages cost is going to be relevant. Is it clear, students? From my existing employees, I am getting the work done and the labor hours is in shortage. Relevant cost is the wages plus the opportunity cost. Logic is clear. Should we continue, students? Yes, yes, wait a minute. This will try explaining one more time. Yes, if you have not understood, I will try explaining one more time. Yes, look at this. There is no hard and fast rule. There are going to be different scenarios. When we solve questions for different scenarios, different things are going to come. Firstly, if we are getting the work done from him by making him work for overtime, he's working overtime. Now he was working for 8 hours. I'm telling him, yes, you don't sacrifice that work. Let that work be there. But you work 2 hours extra. For 2 hours extra, I'm going to pay you 300. So if I'm going to do it that way, then whatever is the overtime wage I'm going to give, that is going to be relevant. Okay, but we are not discussing that scenario. What we are telling is, yes, to do this work, he is sacrificing that work. To do this work, he is sacrificing that work. So that work's opportunity cost is going to be relevant. And at the same time, yes, in single line I will tell, yes, the labor cost was irrelevant there also, it is irrelevant here also. So because the labor cost was irrelevant there as well, so additionally that amount also I should be getting. Yes, simply telling, in cash, yes, just imagine in cash, see, for my employee, for my permanent employee, I'm paying 10,000 irrespective of whether I manufacture shirt or not. So if he is manufacturing shirt, additionally what all cost we are incurring? Yes, labor anyways we are paying. So additionally I'm only paying for material 200, variable overheads 250. I'm just paying 450 from my cash. And how much I'm getting? 1,000. So what is this? Net I'm having 550. What is this net 550? It is my contribution of 250 plus my labor cost of 300 rupees. That is my 550. So I'm telling it is going to be wages plus opportunity cost. I hope things are clear. Okay. Now, next moving into overheads. Yes, we've discussed overheads could be variable overheads, it could be fixed overheads. Yes. Variable overheads. Yes, for every unit we are incurring these variable overheads. So variable overheads is always relevant. Yes, variable overheads is always relevant. Say for example, yes, I want to start CA final classes for recording. Yes, I'm using the CA final recording studio. So for the hours for which I'm going to record the class, I will be switching on the lights, I will be running the AC, whatever is the equipments I'm using. Yes, whatever is the electricity bill, more the hours, more will be the cost. Variable cost it is. It is specifically to take that decision. So this variable cost is always relevant for decision making. Is it clear, students? But coming to fixed overheads, what about our fixed overheads? Fixed overheads could be two different types. One is the allocated overheads, one more is the additional overheads. What is this allocated overheads? Yes, my recording studio, the room wherein I am recording, for that place I am paying 10,000 rupees per month. So previously I was recording only for CA intern, so I am calculating what is the cost for CA intern, what is the cost I am incurring for CA final. Previously I was recording only for CA intern, so this complete 10,000 I would distribute it only for CA intern. But now I am recording for CA intern also, CA final also. So what am I doing? This 10,000 rupees I am distributing, I am just distributing for calculation of cost, I am distributing between CA intern and CA final. In reality, am I incurring extra 5,000 for CA final? No. Just the existing 10,000 I have allocated, I have distributed, I have absorbed, I have recovered. Yes, it does not form a part of relevant cost. Why? Because if I was taking CA inter, even in that time I had to pay my landlord 10,000. Now I am taking CA inter plus CA final. Still I am paying landlord 10,000 only. So whether I take CA final classes or not, the rent will be 10,000 only. So it is going to be irrelevant. Is it clear, students? But if I am incurring additional overheads, say for example, I had this place wherein my administration staff were working. Yes, because we had CA final classes as well, this place was not sufficient. I am taking an additional place. Here the rent was 10,000, here I am paying 4,000 extra. This 4,000 extra is going to be relevant. When I had no CA final classes, monthly I was paying 10,000. Now monthly I am paying 14,000. So this 4,000 is going to be relevant. Is it clear, students? It is relevant for decision making. Yes. So we are discussing the relevant cost for material, labor, overheads. Let's try to revise it one more time. Material, if it is not in stock, I need to purchase. So purchase cost is relevant. If it is in stock, I ask if it is regularly used. If it is regularly used, I need to replace the raw material. Replacement cost is relevant. It is not regularly used. I was thinking to sell it off as scrap. So the realizable value or benefit from alternate use, whichever is higher, is going to be relevant. Next, coming to labor, for additional employees, for new employees, whatever amount I'm going to pay is going to be relevant. But for existing employees, I ask if there was a spare capacity. If there is a spare capacity, I tell the relevant cost is nil. There is no relevant cost at all. But if there is no spare capacity, that is employee is sacrificing his existing work, then the wages as well as the opportunity cost is going to be relevant. Is it clear, students? Again, coming to overheads, variable overheads is always relevant, and fixed overheads, allocated overheads is irrelevant, but additional overheads is going to be relevant for decision making. Now, going for the final item, machine cost. Yes, machine cost, write it down, just scratch this off. How do we arrive at machine cost? Relevant cost of machine. It is going to be rent or net cost of purchase, whichever is lower. Yes, this is when we are buying a new machine. Look at this, students. Let us try to understand it with the help of an example. Yes, suppose I'm asking my employee, I'm asking we want to purchase a new Xerox machine, new printing machine, because we are providing physical books for CA final. So I ask what all options are available. Yes, So I'm asking, if we get this machine on a rent, how much we have to pay? We want it for 3 months. If we are getting it on a rent, how much we have to pay? He's telling if we get it on a rent for 3 months, it is going to be 15,000. So if I take a decision that I'm going to start CA final, I have to purchase this machine, I have to pay 15,000. Option number 1, I get it on rent. Or option number 2, what can I do? I can purchase the machine as well. So next I'm asking, if I purchase the machine, how much it is? He's telling it will be 50,000 at the time I purchase the machine, but it is required only for 3 months, right? So at the end of the period, I can sell off the machine as well. So I have purchased, I have paid 50,000. Yes, at the end of 3 months, I am selling. While I am selling, I am getting 30,000. So how much net I am paying? Net I am paying 20,000. So which option will I choose? Will I get the machine on rent, or will I purchase and resell the machine? What will I do, students? Yes, obviously wherever the cost is less, that is what I am going to do. Yes, if I am getting it on rent, I have to pay net 15,000. Yes, if I am getting it on rent, I have to pay 15,000. If I am purchasing, now I will pay 50,000. By end of 3 months, I will be getting back 30,000. So net I have paid 20,000. So if I get it on rent, 15,000 I have to pay. If I am purchasing, net I have to pay 20,000. What I would have done? I would have got it on rent. So whichever is lower is the option we would have chosen. Whichever is lower is the amount we are going to incur. So if I start my CA final classes, for my printing machine, I have to pay 15,000 minimum. That is going to be relevant. Is it clear, students? Any doubts? Yes, but if I'm already having a machine, yes, then the depreciation and other things are not going to be relevant. Suppose I've already purchased the printing machine. Then I'm telling, yes, they are going to charge me the depreciation of that fixed overhead. They are going to charge me the depreciation of the machine. It is not relevant, because suppose it is a machine of, say for example, 1 lakh rupees. Yearly depreciation is 10,000 rupees, 10%. Now whether I start my CA final classes or not, that depreciation of 10,000 rupees will be there. Okay, yes. So do not go specifically just by the formulas. Go by logic. Always ask the question, if I do this, how much is the cost? If I don't do this, what is the cost? You will automatically arrive at the relevant cost. Is it clear, students? Any doubts? Should we continue? Yes, so with this we've finished the concept of relevant costing. Concept 1C, relevant costing. Issues while pricing is based on relevant cost. We will discuss it later. Now let us try to revise the concept one more time, students. Everyone pay attention with me. Is relevant cost. It is the cost relevant for taking a decision. That is, if we take the decision, we incur. If we don't incur. That is the relevant cost. Two conditions: it should be a future cost and it should be a differential cost. Yes, firstly we have told historic cost, committed cost, sunk cost, irrelevant because already incurred in the past. Next we have told fixed overheads, allocated overheads is irrelevant, but additional is going to be relevant. Next, opportunity cost, always relevant, and out of pocket or additional cost is also going to be relevant. Now different items. For material is not in stock, I will purchase, so the purchase cost is relevant. It is in stock and it is regularly used, I need to replace, so the replacement cost is going to be relevant. Yes, it is in stock, yes, but it is not regularly used. What I was thinking of doing, I was thinking of selling it to scrap, that is realizable value, or benefit from alternate use, whichever is higher. Yes, additional points: purchase cost and replacement cost are generally one and the same. If alternate use is not available, we will not consider it. If we are incurring a cost to dispose, otherwise we were getting realizable value. Now we are incurring cost to dispose, we are going to show it as negative. That was for material. Next, for labor. If you are getting additional employees, whatever the wages we are going to pay is going to be relevant. But if you are getting the work done from existing employees, if there is a spare capacity, relevant cost is nil. But if there is no spare capacity, wages plus the opportunity cost is going to be relevant. Next, coming to overheads, variable overheads always relevant. Fixed overheads, allocated is irrelevant, but additional is going to be relevant. Next, for machine, yes, what is the minimum we want to incur? It is either the rental cost or net cost of buying, that is purchase minus sale value. Whichever is lower is the option we are going to select. So that is the relevant cost. Is it clear, students? Now should we start solving questions? One by one should we start solving questions, students? Are you guys ready? So we are going to start solving questions, students, one by one. I hope you all have a printout of notes. So concept 1C, relevant costing. Yes, we are going to solve each and every question from the study material. Again, I have not given you a separate question booklet because I want you guys to have a look at the questions from the study material itself. We have two different set of books. One is ICAI's study material, and additionally ICAI has also released it additional case study booklet wherein there are case studies, case scenarios and skill based assessment questions. So we will be covering questions, all the questions from all these sources. So let us start solving questions one by one. Now we are going to start with illustration number 6, page 5.23 from our textbook. Look at the students. Yes, Excel Polymers, located in Saidabad industrial area, manufactures high quality industrial products. AT Industries has asked Excel Polymers for a special job that must be completed within a week. Now what is required? Look at this. We have Excel Polymers. There is one AT Industries. It has asked Excel Polymers that you should do one special job. Now we as Excel Polymers, we are calculating how much minimum price that we should bid. What is the minimum price we should bid? What is the minimum we should at least get? Whatever is a relevant cost on accepting this decision, this bare minimum we should be getting. So look at this, every item one by one. Let us start having a look at this. Firstly, raw material R1. What is this raw material R1? Yes, raw material R1 is highly toxic, will be needed to complete the job. Yes, we want raw material R1 which is highly toxic. Now Excel Polymers has purchased R1 2 weeks ago for 7,500. What we did? 2 weeks ago we have already purchased this raw material. Yes, and it is in stock in the excess from that job, and company was planning to dispose it. So what is the meaning, students? Raw material R1 is needed. Is it in stock? Yes, it is in stock. Is it regularly used? No, it is not regularly used. What the question is telling? It is in excess, and what we were planning to do? We were planning to dispose it off, sell it off to scrap. Yes, company is telling that it would cost them 1,250 to dispose of R1. Yes, so if this special order was not there, we had this raw material R1, what we should have done? We should have disposed this R1. How much we would have incurred? Otherwise, when we sell goods for scrap, we get the money, but now we have to pay money. How much we had to pay? 1,250 we had to pay. So this 1,250 is going to be relevant, minus 1,250. Is it clear, students? Again, is this 7,500 relevant? Yes, I had purchased 2 weeks back for 7,500. Is this 7,500 relevant, students? Tell me, is it relevant? Is it not relevant? If yes, why? If not, why not? No, why is it not relevant, students? Because it is historic cost, sunk cost. It is already incurred in the past. Now whether I accept the offer, I don't accept the offer, that is already paid. So it will never be relevant. Is it clear? Now let us have a look at the answer also simultaneously. Look at this, students. Yes, we want raw material R1. It is highly toxic. We had purchased it previously. It was in excess, so we were planning to dispose it off. Yes, we had purchased it previously at 7,500. This will be irrelevant. Yes, the replacement cost, if I have to replace it now, it is going to be cost me 6,000. But why will I replace? It is not used at all. I would have never replaced this. So this will also be irrelevant. So what I would have done, if there was no special job, what I would have done, I would have sold it off as scrap, and to dispose this, I would have incurred 1,250. I would have paid 1,250. This 1,250 is what is going to be relevant. So I will write the relevant cost is minus 1,250. Is it clear, students? Should we continue? Now, look at the next paragraph. Yes. We will read the question, discuss it later on. Yes, special job will require 250 hours of G1 and 100 hours of G2. Yes, to do the job, we want G1 grade employees and G2 grade employees. How much hours is required is also given. Excel Polymers pays their employees 630 and 336 for 42 hours. In a week, it is paying 630 rupees and 336 rupees for 42 hours of working. Now, Excel Polymer anticipates that it is having excess capacity of 150 hours of G1 and 200 hours of G2 in the coming week. Now, Excel Polymers can also hire additional employees, new employees can also be hired on an hourly basis. These part-time employees are paid an hourly wage rate based on the wages paid to current employees. Whatever is the wage rate, hourly wage rate we are paying to current employees, same wage rate will also be paid to these new employees as well. Suppose that material and labor comprise Excel Polymers only cost. So what is it telling? We only want material and labor. We want raw material R1 and grade G1 employees, grade G2 employees for completing the special job. Calculate the minimum price. Calculate the minimum price that Excel Polymers should bid. Now we have already calculated for raw material. Now let us calculate for labor. Look at this, students. What is the question telling with respect to labor? Illustration 6, page 5.23, right? Yes. Yes. With respect to relevant cost, with respect to labor, we are calculating the relevant cost. Yes. Which all grade employees are required? Grade 1 employees, grade 2 employees. Yes. For grade 1 employees, how much we are paying, students? What is the question telling? We are paying grade 1 employees 630 rupees for 42 hours. 630 rupees for 42 hours. That means per hour, how much we are paying, students? Per hour, how much we are paying, students? 630 divided by 42, we are paying them 15 rupee per hour. Is it clear? Grade 2 employees, we are paying them 336 for 42 hours. That means per hour, how much we are paying, students? Per hour we are paying 8 rupees. Yes. To do this job, how much hours of grade 1 employee is required? Special job will require 250 hours of grade 1 employees. 250 hours of grade 1 employees is required. And again, what is the question telling? Excel Polymer anticipates having excess capacity of 150 grade 1 hours. Yes, how much excess capacity is available, students? 150 hours excess capacity is available. In the next week, 150 hours excess capacity is available. That means how many additional hours is required? 100 hours extra is required. Look at this. In the next week, employees have 150 hours free. So firstly, from grade 1, 150 hours, these I will utilize. Again 100 hours I need. For that, what I will do? I will hire employees from outside. Question is telling I can hire employees from outside. How much I need to pay? Whatever is the hourly rate, I need to pay it to them. How many hours they are working? They are working for 100 hours. What is the hourly rate, students? It is going to be 15 rupee per hour. So how much I need to be paying to them? I will be paying to them 100 hours into 15 per hour, 1500 I should be paying. Yes or no? Look at this. If I accept the offer, 250 hours of grade 1, 250 hours is required. 150 anyways freely is available. I will use that. For additional 100 hours, I get new employees. For them, I am going to pay at the rate 15 per hour. I will be paying 1500. Now, let us have a look at grade 2 employees. Yes, 100 hours is required. What is question telling? How much extra hours we have? We have an excess capacity of 200 hours. Next week, 200 hours extra is there. Out of that, we will tell, yes, for 100 hours, work on this. Are we paying anything extra? We are not paying anything extra. So, is there any cost which is relevant? No. 100 hours spare is complete, 100 hours spare is available. So whether additional hours is required? No, additional hours is not required. So whether the cost is going to be relevant? No, the cost will not be relevant. Now calculation of total relevant cost. Look at this, students. Relevant cost of labor, you can write it down. Grade 1 employees, for 100 hours I need to be paying at the rate 15 per hour. It will be 1500 rupees. And for grade 2 employees, I will not be paying anything. The relevant cost will be nil. So what is the minimum price I should be quoting, students? What is the minimum price I should be quoting? If I accept this, for grade 1 employees I have to pay 1500. If I accept this, I can save the 1250 which I was otherwise giving. So if I accept this, net I have to pay 250 rupees. So the minimum amount I should be getting is 250 rupees. Is it clear? Any doubt, students? Yes, this is what the answer is. But along with the answer, along with the calculation, what ICAI expects in the relevant costing is the notes at the end. In this question, we have not left space for notes. No issues. Yes, at the end of every question, we need to give a note telling what we have done, why we have done. Yes, what we have done, why we have done. First one, we are telling what is it? Raw material R1. Yes, simple one paragraph or 1 or 2 lines should be sufficient. Yes, raw material is in stock and not regularly used. Company was planning to dispose it off at rupees 1250. Now it can save the 1250. So 1250 will be reduced while calculation of relevant cost. Note number 1 for raw material R1. Next we have grade 1 employees. Grade 1 employees. Yes. Total 250 hours. For 150 hours, yes, spare capacity is available. Yes, all these keywords you need to highlight. Spare capacity is available. So relevant cost is nil. Yes. For balance 100 hours. Yes, for balance 100 hours, what are we doing? Are we getting the work done from existing employees? Are we asking them to sacrifice their work? No. We are getting extra employees. We can get additional employees. On temporary basis. Therefore, relevant cost is 100 hours into rupees 15 per hour. It is 1500. And next you can write for grade 2 as well. Yes, 100 hours is required. Spare capacity of 200 hours is available. So the relevant cost is as simple as that. Is it clear, students? Now have a look at ICAI solution. Yes, obviously you look at ICAI solution, what you need to keep in mind is it is the bare minimum presentation that is required. Obviously you can keep your answer better than ICAI, but bare minimum whatever is required should be there. Yes, if you look at ICAI's answer, Here it is actually a practical question, but they have not shown any calculation, any table, nothing. They have just written stories. Yes, obviously stories are required at the end, notes are required at the end, but calculation, a table is required. It will show in a single place, okay, for raw material what is the relevant cost, for labor what is the relevant cost. It is not shown. Okay, obviously our presentation is going to be either ICAI's presentation or better than ICAI's presentation. Look at this, what question is telling. Opportunity cost of labor. G2 has zero opportunity cost as there is already spare capacity. Now, however, company has to pay for G1 labor for 100 hours. Look at this, it is telling out of 250 hours, 100 hours is available. So for 100 hours, I will pay at 15 rupees, 1500. So cost of labor is going to be 1500. Material cost. Yes, the raw material has no alternate use. It was planning to dispose of at 1250. Now it can actually save 1250. So the opportunity cost is going to be negative 1250. Yes, so the minimum price is going to be 1500 minus 1250, 250 rupees. So the minimum price to be charged is 250. Is it clear, students? Should we proceed to the next question? Yes. Yes, let's proceed to the next question, students. The next question is going to be test your knowledge question 5, page 5.37. Yes, look at the question, students. Y Connections, a China-based firm, has already developed ultra-thin tablet S5 with new features like the ability to open two apps at the same time. Completely nonsense. Now, the tablet cost 5 lakh rupees to develop. What is it, students? Is it relevant? Yes, now let us look at the complete question. Yes, it has undergone extensive research and is ready for production. Currently, the firm is deciding on the plant capacity. Yes, which would cost either 35 lakh or 52 lakh. The additional outlay would allow to increase the capacity from 500 units to 750 units. Now, what is the decision we are going to take? Look at the point in time, students. Yes, till this point we have done the development of the product. Yes, for development we have already incurred 5 lakh. Already I have paid. Now whether I start production, I don't start production, this 5 lakh is gone. It is historic. It is sunk. It has no relevance in decision making. Now what is the decision I am going to take, students? What is the question telling? Now I am deciding how much production should I do. Should I produce 500 units or should I produce 750 units? Yes, for the decision whether the development cost is going to be relevant, whether I produce 500 units, that cost is already incurred. Whether I produce 750 units, that cost is already incurred. So this cost is a sunk cost and is going to be irrelevant. Is it clear? Yes. No. Relevant data of the life cycle of the tablet at different capacity levels is given. What is the decision we are taking? Should we produce 500 units or 750 units? Now, two different levels, 500 units, 750 units. If I am selling 500 units, I will be in a position to sell at the rate 79,600. Yes, I will be selling every tablet at the rate 79,600. But if I increase it to 750, I should be selling it at 69,600. What is the variable selling cost? Variable selling cost to sell. What is the variable cost I am incurring? 10% of selling price. Variable selling cost here is again 10% of selling price. Salvage value of plant. If I purchase the plant, at the end of it, I will be getting 6,25,000. I will be getting 9 lakh rupees. PV ratio is going to be 40% here. PV ratio is 40% here. In the next place, whether PV ratio is given, no, it is not given. Advise. What is required, students? Advise. We are not just supposed to calculate. We should advise regarding the optimal plant capacity. We have to advise which is the optimal plant capacity. Should we go for 500 units or 750 units? Tablet's life cycle is 2 years. Ignore the time value of money. Yes, have another look at the question, students. We will be solving this question. Now, yes, what is the decision we have to take, students? What is the decision? What are we looking? Should we produce 500 units or should we produce 750 units? This is the decision that we are taking. Now, yes, what will we produce, students? Obviously, how do we take decision? Should we produce 500 or 750? How do we take a decision? Wherever profit is maximum or wherever contribution is maximum, that is what we are going to choose. If in 500 units contribution is maximum, I'll tell let me produce 500 units. If in 750 units contribution or profit is maximum, I'll tell let me produce 750 units. Yes or no? So how do we take a decision on financial basis? Wherever my profit is more, that is what I will do. Yes. So what I am going to calculate? I am going to calculate my expected profit in two different levels. If I am producing 500 units, what will be my profit? If I am producing 750 units, what is going to be my profit? Yes. What is the selling price, students? If I am selling 500 units, let us calculate all the data per unit. Yes, what is the selling price? Selling price is going to be 79,600. Yes, if I am selling 750 units, what is the selling price? It is going to be 69,600. So we know the marginal cost sheet format. Sales minus variable cost gives you contribution. From contribution, you reduce your fixed cost, you will arrive at profit. Now, we want to calculate our variable cost. Yes, variable cost, total variable cost. Yes, what is question telling? Question is giving you the variable selling cost. What is the question telling? Variable selling cost at 500 units. How much is it, students? What is the variable selling cost? It is 10% of selling price. So if my selling price is 79,600, 10% of that 7,960. 69,600, it is again going to be 6,960. But variable manufacturing cost is not known. How do we calculate the variable manufacturing cost? Look at the data and tell me, students, how do I calculate the variable manufacturing cost? Yes, think and tell me, students, how do I calculate? Yes, what is the additional data given in the question? Question is telling me that my PV ratio is 40% if I am selling 500 units. Yes or no? Question is telling if I am selling at 79,600, then my PV ratio, what is PV ratio? My contribution percentage is going to be 40%. So based on that, if my selling price is 79,600, what is the question telling? My contribution will be 40%. That means my variable cost is going to be 60%. Yes or no? Yes. So out of 79,600, 60% will be my variable cost. 40% is going to be my contribution. So let me calculate 79,600 into 40%. 31,840 is going to be my contribution. 79,600 into 60%. 47,760 is going to be my variable cost. Now I have calculated my variable cost when I am selling 500 units. The variable cost per unit is going to be 47,760. In this variable cost, every variable cost I have included. Yes, I have my variable manufacturing cost, I have my variable selling cost. So this variable cost will include variable manufacturing cost as well as variable selling cost. Yes, whether variable manufacturing cost is known explicitly, is it directly given in the question? No. But whether variable selling cost is given? Yes. What is the question telling? It is 10% of selling price, so it is going to be 7,960 per unit. Now look at this. The total variable cost I have to pay is 47,760. Out of that, for selling I have to pay 7,960. That means for manufacturing, how much I should be paying? It is going to be my balancing figure, 47,760 minus 7,960. It is going to be rupees 39,800. Is it clear, students? I've calculated my variable manufacturing cost as 39,800. Now I know that when I am selling 500 units, my variable manufacturing cost is going to be 39,800 and my contribution per unit is going to be 31,840. Now the question is, what is my variable manufacturing cost if I am selling 750 units? How do I calculate? Yes, remember students, the basics of marginal costing. We have told 3 assumptions of marginal costing. Unless otherwise specified, that is, if nothing is given in the question, what do we assume? We assume that selling price per unit is constant, variable cost per unit is constant, and total fixed cost is constant. Yes, so about variable manufacturing cost, nothing is given. So what do we assume? We assume that variable manufacturing cost per unit, whether we manufacture 500 units, 750 units, is going to be the same. Is it clear, students? So what is going to be my variable manufacturing cost here? It will be 39,800. Yes, so now what is the contribution if I am selling 750 units, students? 769,600 minus 39,800 minus 6,960. I will be getting 22,840 per unit. If I am selling 500 units per unit, I have got 31,840 contribution. Like this, I am selling 500 units. So how much will I get, students? 1,59,20,000. It is going to be 1,59,20,000 rupees. Yes, if I'm selling 750 units per unit, I'm getting 22,840. It is going to be 1,71,30,000. This is the contribution I get. Yes. Now fixed cost is also being incurred. Yes, what is the question telling about fixed cost? If I am producing 500 units, yes, what is the cost of the plant? I have to pay 35 lakh now. How much I am paying? 35 lakh now. Yes, the value, the lifetime of the asset is going to be 2 years. 2 years is the lifetime of the product. At the end of it, what I will need to do? I will have to sell off the product. Yes or no? I will have to sell it off as scrap. If I sell it off as scrap, how much will I get, students? The salvage value, 6,25,000. So what is the net cost I am incurring for 2 years? What is the net cost I am incurring for 2 years? Look at this. At the starting of first year, yes, I've paid, how much is it? 35 lakh. At the end of second year, I'm getting 6.25 lakh. So net how much I've paid, students? 35 lakh minus 6.25 lakh. It is going to be 28.75 lakh. Yes or no? So we will tell the net fixed cost. It is going to be 35 lakh minus 6.25 lakh. It is 28 lakh 75,000 rupees. And if I am selling 750 units, yes, initially I have to pay 52 lakh, but at the end of it I will be getting 9 lakh. So my net depreciation will be 43 lakhs. So what is the net profit I will be getting? 1,30,45,000 rupees. Here how much it is going to be? Is going to be 1,28,30,000. Now you guys tell me which one is better, students. Which one is better? What should we choose? Should we produce 500 units or should we produce 750 units? Which is giving me a higher profit, students? Which one should I do? Should I go for 500 units or 750 units? Which is giving me a higher profit, students? Tell me. Yes, I should be going for 500 units. How much extra I am getting, students? How much extra I am getting? Look at this, 1 crore 30 lakh 45,000 minus 1 crore 28 lakh 30,000. I'm getting rupees 2,15,000 extra if I am producing and selling 500 units at the rate 79,600. Is it clear? So from a financial perspective, every decision has two perspectives. One is a financial perspective, one more is a non-financial perspective. Say for example, I as a teacher, yes, from a financial perspective, what is my financial perspective? Yes, financial perspective decision would be increase my price so that I will get more. Or from a non-financial perspective, yes, I would want to create a better impact. So that is why we are keeping the prices low. So every decision has two perspectives. Now from a financial perspective, which is better, students? Where should we go? Should we produce 500 units or 750 units? We should obviously be producing 500 units because overall profit is higher. So look at, yes, what is the question asked us? Question has not asked us to calculate the profit. Question has told advise. We need to advise what should we do. Yes, there are two important notes. Firstly, development cost was sunk cost, so it is irrelevant. Again, question is telling 500 units and 750 units. We have assumed that it is over the lifetime of the product. There could be two different assumptions possible. First assumption is I am producing 500 units for 1 year, or the second is I am producing 500 units for the lifetime of the asset. ICAI has assumed that 500 or 750 units is over the lifetime of the product. Yes, that is 2 years. So same assumption we have also taken. Now, what is the advice we are going to give students? Look at this. From a financial perspective, what do we tell? Obviously, we should be going for 500 units. That is the high price, low volume. High price we are charging, lesser units we are selling. Because how much additional benefit we are getting, students? We have got an additional benefit of 2,15,000. Because we have got an additional benefit of rupees 2,15,000. But every decision has a non-financial perspective as well. Now think of the non-financial perspective. Obviously, yes, there is a difference in profit of 2 lakh rupees, but which one would be better? Think of it from the long-term perspective. Suppose I am telling, yes, option number 1, I can sell my CA final class. I can provide my CA final classes for 20,000 rupees and I can earn, say for example, 10 lakh rupees per annum. Or else I can give it off at 2,000 rupees and I can earn 9,50,000 rupees. Obviously, from a financial perspective, yes, I can tell this is better. But from a non-financial perspective, I can tell, yes, if I'm selling it at a low price, yes, I'm going for a higher volume. Yes, it is reaching more students. So if I'm reaching more students, obviously in the long term, if the classes is good, more students will keep coming. So in the long term, it is going to benefit me. So what we are telling, look at this, non-financial factors will not increase our profit in the short run. Yes, in the short run, it will not increase, but it will assist us. It will help us to increase our profit in the long run. Yes, again we are telling there is no significant difference between the profit. If you look at it, yes, we are profit, we are talking in terms of crores, 1 crore 30 lakh, 1 crore 28 lakh. So if you look at it from that perspective, the difference in profit is not that big, is what ICAI is telling. Again, it is every point is what I've just picked from ICAI. Yes, few additional points I would have included, but whatever point is given there, I would have not excluded. You can trust me. Again, I am going to show you ICAI's answers as well so that you can have the belief. So what question is telling? Yes, the difference in profit is just 2 lakh rupees. So there is no significant difference. So what is the question telling? We can think of, we can think of going for high volume, low price. That is selling 750 units. Why? Firstly, we will be getting a higher market share. In the market, we are getting a higher share. We are in a position to sell more units. We will reach more people, because of which in the future we will get more benefits. Point number 1. And long-term brand image would be created. If our tablet is very good, in the future, if we are bringing up a new tablet, it will help us because more people have already known about my product. They know the quality about my product and it has created a brand image. Is it clear, students? Now, advice, every time advice comes, we need to write the advice from financial, non-financial perspective. This is what ICAI has given. You could have written something else of your own. Does not make a difference. Yes, obviously, you need to have some basic things in mind. Whenever we are telling an advice, we should tell financially, non-financially. Non-financially, what we are telling, see, non-financial factors will not increase profit in the short run, but in the long term, it will help us to increase our profit. What we are telling, yes, we should go for higher volume. Why? Because firstly, it will give us a higher market share. We become a bigger player in the market. And secondly, in the long term, it will give me a good brand image. It will give me a good brand value. Is it clear, students? Now let us have a look at ICAI's answer. Test your knowledge question 5. Where is the answer, students? It is page 5.46. Yes. Look at this. I have given you the answer in brief, in points. I say obviously is going to give it to you in paragraph. Yes. Now, based on above expected profit statement, purely on financial consideration, it should go for high price, low volume, that is 500 units. However, non-financial consideration should be considered. Why? Because they do not contribute directly to profit in the short run, but contribute to profit in the long run, we have told. Here it is important to note that life cycle is 2 years. There is no significant difference in the profit. I have told you that. Yes, so firm may opt for high capacity. Why? Because firstly, it will help us to increase our market share, and second, for the long term, it will help us to create a brand value. Believe me, every point I've given it in short bullet points, so that firstly it becomes easier to read, becomes easier to understand, and again 1.5 day before examination we can have a look at all these points again. Yes, all these calculations are done. We have calculated variable manufacturing cost. Again, I have done it in the form of chart. Yes, I say obviously, I say will not be doing chart, it will be doing in the form of table. You can do it the way you want. If you want, you can do it as chart as well, or table. Obviously, you know, from selling price, you reduce the contribution, arrive at variable cost. See, 40% was contribution, you arrived at variable cost. From that, reduce variable selling cost, you have arrived at variable manufacturing cost. At two different points, they have calculated the net profit. Yes, they have calculated in terms of thousands. We have calculated directly in terms of rupees. Yes, the answer is same. 1 crore 30 lakh 45,000, 1 crore 28 lakh 30,000. Development cost is sunk and is going to be irrelevant for decision making. Is it clear, students? Any doubts? Should we continue? Excuse me. Yes. Moving into our next question, which is the next question, students. Test your knowledge question number 6, page 5.37. If you go to the index, the first page of the chapter, every concept is for every concept. What all are the illustration questions? What all are questions from test your knowledge? That is at the end of the chapter. What all are the practical questions from skill-based assessment questions? That is your additional case study booklet. These are the practical questions. Again, for case studies, you will be having a separate PDF booklet wherein you will be having case studies from ICAI, additional case scenarios from ICAI, additional case studies from ICAI, and additional case scenarios. All of that, everything from ICAI source will be covered. Yes. Now, we are moving into test your knowledge question number 6, page 5.37. Yes. Color Paints is a manufacturer of industrial dyes. It has received an order for 200 kg of powder dye that needs to be customized to certain specification. The job would require the following materials. What all material is required? A, B, C, D. Now, look at A. Total 2000 units are required already in inventory. Am I having anything in my inventory? No. So, complete 2000 I have to purchase. B, 3000 is available, required. Out of that, 1200 is available. Book value is given, realizable value is given, replacement cost is given. Firstly, whether book value is going to be relevant at any point of time, whether book value, the value at which I have purchased previously, is it going to be relevant, students? It will never be relevant. You can directly strike it off. Realizable value. When is realizable value relevant? It is relevant if raw material is in stock and not regularly used. Replacement cost. See, purchase cost is not separately given. So we will assume this itself is my purchase cost. Because today if I am replacing, what I have to pay? It's the purchase cost, one and the same. Now let us have a look at additional points which is given. Yes. Raw material B, about raw material B they are telling, it is used regularly in production. Regularly we are using it in production. Yes, therefore any stock used towards this job would need to be replaced. So what is it about raw material B? It is regularly used. Yes. About raw material C and D, let us see what question is telling. Inventory of raw material C and D are from stock that was purchased in excess. We had purchased extra. That means it is not regularly used. There is no use of it now. Now question is telling material C has no other use. Is there any alternate use? If raw material is in stock, it is regularly used, we have told it is going to be the replacement cost. But if it is not regularly used, we have told it is the realizable value or benefit from alternate use, whichever is higher. So for raw material C, they are telling there is no other alternative use only. So the only option available with us is we have to sell it off as scrap. So for raw material C, we can tell yes, it is not regularly used plus no alternate use. And for raw material D, what is the question telling? It can be used as a substitute for 700 units of raw material Z, which currently costs 11 rupee per unit. Yes. So what is the question telling? Yes, it is not regularly used. Raw material D is also not regularly used. We have it in our inventory, but there is an alternative use for this. So what is required, students? Analyze the relevant cost of material while deciding whether to accept the order or not. We have 4 raw materials. We need to analyze the relevant cost. Let us start doing one by one. I hope you guys are solving the questions simultaneously. If the speed is too much, it is your duty to inform me, students. Yes. What is the question telling? Firstly, raw material A. Total how much units is required? 2000 units of raw material A is required. Do we have them in our stock? How much unit is lying in the stock? Units in inventory, in stock, it is 0. So I am not having any raw material A. So what I need to do? How much I need to purchase? 2000 units. Complete 2000 units I need to purchase. At what price I am purchasing? What is my purchase cost? Replacement cost. Yes. All 2000 units should be purchased. Relevant cost. What is the relevant cost? To purchase, what is the cost I am incurring, students? It is 8 rupee per unit. How many units should I purchase? 2000 units. So what is the total cost I should be incurring? 16,000 rupees is the relevant cost for raw material A. Is it clear? Any doubts? Yes, for raw material A, the relevant cost is going to be 16,000. In terms of rupees. Now, moving into raw material B. What is the question telling about raw material B? Yes. Altogether, how many units of raw material B is required? 3000 units is required. Out of that, what is question telling? 1200 units is already in stock. So how many units extra I need to purchase? 1800 units extra I need to purchase. 1200 units is already there. So 1800 units I need to purchase. Now 1800 units I need to purchase. Now I am purchasing. So purchase cost or the replacement cost is going to be relevant. So I can tell purchase cost or the replacement cost. What is the replacement cost, students? 10 rupee per unit. So what is the cost I will be incurring? 1800 units at the rate 10 rupee per unit. I will be incurring 18,000 rupees for these 1800 units. Now 1200 units are already in stock. What is the question telling? Material B is regularly used. So if it is in stock, regularly used, what I need to do? I need to replace that. So replacement cost is going to be relevant. Replacement cost of 10 per unit. So for these 1200 units also, I need to replace. To replace, I will be incurring 10 per unit. So how much I will be incurring, students? 12,000. So all in all, how much I am incurring, students? 12 plus 18. 30,000 rupees will be the relevant cost. Is it clear? Yes, so for raw material B, relevant cost is going to be 30,000 rupees. Yes. Next, for raw material C, yes, total, how many units of raw material C is required? 2000 units. How much I'm already having? I'm already having 1400 units. So how much I need to purchase extra? 600 units I need to be buying extra. 600 units I am purchasing extra. To purchase, how much I am paying, students? To purchase a new item, how much I should be paying? At the rate 14 per unit. So 600 into 14 per unit, it is going to be 8,400 for these 600 units. And for these 1,400 units, what is the question telling? It was purchased in excess. Extra I had purchased. So now, is there any other alternate use? No. So the only option for me is to sell it off as scrap. So if I sell it as scrap, how much realizable value I will be getting, students? I will be getting at the rate 9 rupee per unit. So 1,400 units at the rate 9 per unit, I would be getting rupees 12,600. So altogether, how much is the relevant cost, students? 12,600 plus 8,400. It is going to be 21,000 rupees. Is it clear? Yes. And finally, we have raw material D. Raw material D's calculation is going to be interesting. Pay attention, everyone. What is question talking about raw material D? Firstly, raw material D was purchased in excess. So raw material is in stock and it is not regularly used. Yes, so realizable value or benefit from alternate use, whichever is higher. Yes, so again, what is question telling? It could be used as a substitute for 700 units of material Z. I want 700 units of material Z. For that, this raw material could be used as substitute. Now look at this. Altogether, how many units of D I want? 500 units I want. How much is already in stock? 500 units is already in stock. So should I purchase anything extra? No, I need not purchase anything extra. So for these 500 units which is in stock, what all option I have? Option number 1, sell it off as scrap. Now I sell it off as scrap. How much I would have got, students, if I sell it off as scrap? Scrap value is going to be realizable value 12 rupee per unit. So for the 500 units at the rate 12 per unit, I would have received 6,000 rupees. 500 units at the rate 12 per unit. Or alternatively, what I can do? Yes, these 500 units could be used as a replacement to 700 units of material Z, which is currently costing 11 rupee per unit. Yes, I have some other material Z is required. Yes, how many units of material Z was required? 700 units at the rate 11. 700 at the rate 11. 7,700 rupees material Z. Yes, otherwise I am producing another product. What I would do? Yes, what I would have done is I would have used it instead of material Z. Material Z is costing me 7,700. Instead of that, I would have used this raw material D. But now, because I am using it for this special job, I will not be in a position to use it there. So that cost is going to be relevant. Now, if this special order was not there, yes, if this special order was not there, what I would have done? I had two options. Option number 1, sell to scrap, get 6,000 rupees. Option number 2, use it as a replacement, save 7,700. What I would have done, students? Would I have sold it as scrap? No. I would have told I will use it as a replacement because I am saving 7,700. So the relevant cost is going to be 7,700. Is it clear? Yes. So relevant cost is going to be 7,700. Yes, so 16,000 plus 30,000 plus 21,000 plus 7,700, it is going to be rupees 74,700 is the relevant cost. Therefore, the minimum amount, yes, we need to get is 74,700. Is it clear, students? Any doubts? Should we continue? Yes, everyone. Yes, obviously, we have done it in the form of charts. Yes, if you look at ICAI's answers, there will be no charts, there will be no tables as well. ICAI only believes in paragraphs. Is it required in your answer, in your final answer? Yes, to an extent it is required. What is it to an extent? Note is required. Yes, what am I meaning by note? Yes, it is your duty to write it down, students. Yes, raw material A. Yes, 2000 units are required. None of the units are in stock. That means 2000 units should be purchased. Purchase cost is 8 rupee per unit. So the relevant cost is 8 rupee per unit into 2000, 16,000. Raw material B. 1200 units is already in stock and regularly used, so replacement cost is relevant. Yes, 800 units is not in stock, so it has to be purchased, so replacement cost is relevant. Next, raw material C, it is in stock and purchased excessively, so realizable value is relevant. For the balance 600 units, it is not in stock, so replacement cost is relevant. So just one liner is required. Raw material D, it is in stock and was purchased excessively and it is not regularly used. Yes, the realizable value is going to be 12 rupee into 500, 6,000, or benefit from alternate use. Relevant cost will be realizable value or benefit from alternate use, whichever is higher. Realizable value 6,000, benefit from alternate use is 7,700, whichever is higher is going to be 7,700. Make this statement. Look at ICAI solution. ICAI solution will be in page number 5.47. Yes, I told you ICAI only believes in paragraphs. Yes, but is it required in answer? No. Okay, if you look at suggested answer, yes, if you look at answers of students who have scored good marks, yes, obviously they would have given the tables. Obviously, no person can keep writing these paragraphs, these stories for a practical question. Okay, yes, raw material C, same thing is told, raw material D, realizable value, benefit from alternate use, whichever is higher. Okay, so therefore we are going to use this. So total relevant cost is going to be 74,700. Is it clear, students? Any doubts? Should we solve one final question before taking a break, or should we take a break, come back and solve the balance questions? We'll be finishing off all questions from this concept today. So should we go for a break and come back and solve the questions, or should we solve the questions now? Let's just see what all questions are there, what all questions are over. Look at this, students. Illustration 6 is over, textual knowledge 5 is over, 6 is over. We have 7, 9 and skill based assessment question 24 and 30. So we'll do one thing, we'll take a break. It is 7:49. Yes, 8, 5 we will continue the session. It is 7:49, 7:50 we can tell. At 8, 5 we will continue the session. Okay, students? Yes. So go for a break with more energy, more enthusiasm. Yes, we'll come back, we'll solve the balance 4 questions which is there and finish off the concept relevant costing. Should we continue the session, students? Yes, it's 8:05. I hope you guys are back after the break. Should we start the session again? Yes, you guys can hear my voice. Is there any disturbance? Yes, all the students, should we continue? Yes, everybody is back. Yes, other students, do let us know in the comment section. Welcome back after the break, students. So, we are discussing the concept relevant costing. We've discussed the concept. We are solving the questions. We are solving each and every question which is there in the study material and all the additional questions from this concept. We've already solved 3 questions, illustration number 6, test your knowledge question number 5 and 6. We are moving into the next question, test your knowledge question number 7. Test your knowledge question number 7, page 5.38. Yes. Look at the question, students. What is required? Let us first see what is required. Recommend the minimum unit price to be charged to the customer without any loss to the firm. That is minimum price. What is a relevant cost we are incurring? That much at least we should be getting. Point number 1. Analyze with reasons the inclusion or exclusion of each of the cost associated. Every item, if it is included, how much is included, why it is included, and if it is excluded, how much is excluded, why it is excluded, reason should be told. Advise pricing policy in perfect competition. Okay. Now let's have a look at the question. Diesel is engaged in manufacturing many chemical products. We are manufacturing chemical products. It is using many chemicals, some of which are fast moving, some are slow moving, and few are non moving. The firm has a stock of 10 units of one non-moving toxic chemical. What is it? It is a non-moving chemical. I am having 10 units. The book value is 2400. Is book value relevant? I purchased it in the past. It is not relevant. The realizable value is 3500 and replacement cost is 4200. Yes, firstly, book value is relevant? No, it is historic, sunk cost. Whether replacement cost is relevant? No. Why? Replacement cost is relevant only if I am purchasing or if I need to replace the raw material. It is non-moving, so I won't replace it. The only thing I'm looking is, okay, I had these items with me in stock. I was thinking of selling it to scrap. If I had sold it as scrap, how much I would have realized, students? I would have realized 3500. This realizable value is going to be relevant. One of the customers has asked to supply 10 units of the product which needs all the 10 units of non-moving chemical as an input. The other cost associated with production are given below. Allocated overhead, allocated overhead. Is it relevant? Is it irrelevant, students? Tell me, allocated overhead is relevant or irrelevant? Allocated overhead. Existing overhead, is it relevant? No, it is irrelevant. Yes, out of pocket expenses. How much is out of pocket expenses, students? It is 50 per unit. 50 per unit. Labor cost is 40 per hour. For each unit, 2 hours are required. Okay. Other material cost required is 80 per unit. Labor force required will be deployed from amongst the permanent employees. From our existing employees only we are going to use the labor. We will ask if there is spare capacity or there is no spare capacity. The temporary deployment will not lead to any loss of contribution. What does it mean? The temporary deployment will not lead to any loss of contribution. That means there is a spare capacity available from which we are getting the work done. If we are taking our permanent employees and there is a spare capacity, whether any cost is relevant, students, what is the relevant cost in such a scenario? The relevant cost will be nil. Yes or no? Permanent employees are available. I am paying them 10,000 rupees per month. They were sitting idle. I got the work done from them. I am not paying anything extra to them. So the relevant cost is going to be nil and there is no opportunity cost as well. Is it clear, students? Yes. Now let us start solving. Yes. Firstly, what we want? Yes, we have a non-moving toxic chemical. Yes, all the details I have written here as well. Yes, 10 units I am having it in stock. Yes, for 10 units of finished goods I want 10 unit raw material. Yes, 10 unit raw material is available with me. Yes, I have the book value, irrelevant, sunk cost. Yes, replacement cost, again irrelevant because I am not in the mood to replace. It was non-moving, it was extra, it was lying idle with me. So the only relevant cost. If not here, I would have used it, I would have sold it as scrap and got 3,500. Because I am taking this decision, I cannot sell it off as scrap. So this 3,500 is going to be relevant. Is it clear, students? Yes, after this, next we have some other raw materials which is required. Just give me a minute. Test your knowledge question 7, page 5.38. Yes, what all cost we have? Firstly, non-moving toxic chemical is required. Yes, after that, allocated overhead. It is 16 rupee per unit. Is it relevant, students? Whether allocated overhead is going to be relevant? It is irrelevant for decision making. So allocated overhead is going to be nil. Now after that, out of pocket expenses we have discussed. Out of pocket additional cost we are incurring specifically for the decision. So it is going to be relevant. How much we are incurring? It is 50 per unit. To produce 1 unit, 50 is required. How many units we are producing? One of the customers has asked to supply 10 units of a product. We are producing 10 units. So for 1 unit we have to pay 50. So for 10 units, how much I need to pay, students? 500 rupees I will have to pay. Yes, next. After that, labor cost I have. Yes. Labor cost. Labor 40 per hour is required. 2 hours is required for 1 unit. Like that, 10 units we are producing. But whether labor cost is relevant, students? It is deployed from my permanent employees. I am taking from my existing employees and there is a spare capacity. So is the cost relevant? Is the cost relevant? What is the relevant cost, students? Relevant cost is going to be nil. Why? Because previously also I was paying them 10,000 rupees. Now also I am paying them 10,000 rupees. Previously other work they were in a position to do. Now also other work they are in a position to do because I had spare capacity. So the relevant cost is going to be nil. After labor cost, I have other material cost. It is 80 per unit. Other material, extra material I want into 10 units. It is going to be 800 rupees. So what is the total cost, students? Have a look at this. 3,500 plus 800 plus 500. Yes, the minimum amount I need to get is going to be 4,800. Yes, what is the question asking, students? Look at this. Minimum unit price. Yes, this is going to be the relevant cost. This is going to be the relevant cost for 10 units. The minimum recovery for 10 units. Yes, if I am providing 10 units, minimum how much I want? 4,800. What is the question asking? Look at the question specifically. Recommend the minimum unit price per unit. Per unit how much I want, students? Per unit how much is required? So minimum cost per unit is going to be 4,800 is for 10 units. So for 1 unit, it is 4,800 divided by 10, rupees 480 per unit. Is it clear? Yes. Next, analyze with reasons the inclusion or exclusion of each of the cost. What is required? Story is required. Yes or no? See, I am telling. Which is that? Yes, non-moving toxic chemical. Yes, 10 units is already in stock. Yes, it was purchased in excess. It has no other use. Book value will be irrelevant because it is historic. Replacement cost is not relevant because it is not moving. Yes, the relevant cost is going to be the realizable value, which is 3,500. Just whatever we have done, we need to just keep writing in the form of just a paragraph. You can write it in the form of points. Okay, yes, if you feel you are bad in English, this is something you need to practice upon. If you feel your English is good, you can do it for 1 or 2 questions. After that, leave it off. Yes, next, allocated overheads. Yes, this is just an allocation of existing overheads of an organization. Yes, hence it is irrelevant for decision making. Yes, just it is irrelevant, relevant, that amount we need to highlight. That's all. Next, out of pocket. This is the additional expenses we are incurring because of taking the decision, hence it is irrelevant. Whatever it is, 50 per unit into 10 units. Labor cost. Labor is deployed from existing employees and there is no loss of contribution. That means spare capacity is available. Yes, deployed from existing employees, one keyword to be underlined. No loss of contribution. Spare capacity is available. Hence, relevant cost is nil. Relevant cost is nil. 4 highlights. Yes, next, other material cost 80 rupee per unit into 10 units. Next, what else is there? Everything we have written. That is what the question is all about. Next, advise a pricing policy in perfect competition. This is one thing which will come in the chapter pricing decisions. The next chapter we are going to deal is pricing policy in perfect competition. 4 different types of market structures are there. Perfect competition, monopoly, monopolistic, oligopoly. This will come in the next chapter. This is just a simple theory. Yes, once that chapter is over, if you have a look at this will be very clear for you guys. It is just the theory. Whatever we are going to explain there is being written here. Clear, students? Should we move to the next question? Yes, so the next question we are going to solve is going to be test your knowledge, question number 9, page 5.39. Firstly, have a look at the question, students. Have a look at the beauty of the questions. How long the question is. The question itself is running for 3 pages. Yes, welcome to CA Final. Okay, but believe me, yes, once you read the question thoroughly, yes, you feel it's one of the simplest questions. Things seem hard only till you start. Yes. Okay. I will not start reading the question because we will read 3 questions. We will not understand anything. I'll just first give you a summary of what we are going to do. Yes, who are we? We are Aditya Limited. Yes, name of our company is Aditya Group. Okay, we are having 2 different businesses. One is AUS, okay, which is dealing with luxury beauty care. One more is ANZ, which is dealing with daily beauty care. Yes, one is luxury beauty care, one more is daily beauty care. So we have 2 different divisions. Yes, there is one director finance, okay, whose name is LC. Yes, under her there is a manager whose name is Fiona. Under that we are there. Who are we? We are the assistant manager. Okay, company has 2 divisions. One, there is director of finance, below that there is a manager, below that we are there. Now what happened is we company got a new offer. Yes, we have got a new offer from the customer. For that we have to calculate the relevant cost. As simple as that. You will see half page of story. I will read it for you, but absolutely irrelevant it is. Look at this. Same story it is going to tell. Yes, Aditya Group was established in 1975. It sells electronic, personal, grooming and beauty products. It has 200% subsidiaries, AUS, ANZ. AUS is luxury products. Yes, who prefer specialized personal grooming. ANZ is a regular daily beauty care and grooming requirements. Yes, factories are located in India. Products are sold to wholesalers who supply to retail. Completely nonsense. Not required at all for solving. Because what is the question asking? Look at the requirement. Yes, such a big story is there. At the end of it, what is it asking? calculate the relevant cost. As simple as that, and discuss the two problems that can arise as a result of setting prices using relevant costing. Next, look at this. It purchases raw material from domestic, international. Again, products manufactured by AUS can be enhanced based on the products manufactured by ANZ. Therefore, as per production requirements, yes, complete story is there, which is of no use at all. It is telling it has a centralized decision making setup. All these things are given. Yes, nothing is there. See, about you, who are we? I am the assistant manager. We are the assistant manager in finance. Yes, which is headed by director finance LC. There is a director finance LC. Yes, under that there is Miss Fiona, who is the manager. There is director finance. Under that there is manager. Under that I am there. Sometime I also assist direct finance. Okay, all of that is fine. Now business situation 1. From here, things are going to be relevant. Till here, completely was story. Now, yesterday, 5:15 p.m., I got a mail from LC. Who is LC? LC is the Director of Finance. What is the mail telling? With CC to Fiona, she asked you to prepare a cost statement for making a quotation to a new customer. New customer has come, so we need to make a quotation. She has informed you that the customer can also maintain long-term business relationship. You have been requested to gather information related to specification from the sales manager. So, yes, we need to make a quote. For that, we need to calculate what all cost we are incurring to cater to this customer. Yes. So, yesterday, 5:25 p.m. Yes, you have been called by Fiona and provided the product specification receipt from sales manager, for which quotation had to be quoted. Fiona also requested you to gather relevant information, prepare cost statement. Long-term, due to expected long-term business relationship. Yes, sales manager wants to quote the lowest possible price. Lowest, because we are expecting long-term, we want to quote a very small price. What is the lowest price we can quote? That is a relevant cost we have incurred. We are only recovering the relevant cost, whatever we have incurred. AUS currently has some spare capacity which can be utilized. Therefore, only relevant cost has to be considered. After your meeting with reporting officer, you mailed to various concerned department and requested for the data. The following information has been obtained. So till now, whatever was there was again completely story. The only thing is we should consider relevant cost. Now, from here, question is going to start. Now, what we are going to do, again, one page of question is there. I will take relevant points, we'll discuss, we'll add it to the answer. Next point, we'll discuss, we'll add it to the answer. This way, we'll be in a position to save our time. This is regarding production. All these details are about the production. So, obviously, about raw materials, details are given. We will read, we will go and write it there. Now, firstly, you got an email from production manager. It has been informed that 40 tons of material DX is required. This is the raw material one which is required for us. DX is required. How much is required? 40 tons is required. Yes, the material is in regular use. What is the question telling? It is in regular use and has a current purchase price of 380 rupees. Current purchase price is 380 rupees. So now if I have to purchase or replace, how much is required? 380. Currently there are 5 tons which cost 350 per ton. Yes, which I had purchased at the time of purchase, I had purchased it for 350. Is this 350 relevant, students? Is this 350 relevant? Tell me, students. It is the historic cost, sunk cost, not relevant. Resale value is 240. Resale value is relevant? No. Why is resale value relevant? I am using it regularly. I will not resell. So what is the relevant cost? It is 380 per ton. What is the question telling? Altogether 40 ton is required. Yes, in that 5 is already in stock, 35 is not in stock. So 5 in stock I need to replace. So the replacement cost is going to be 380 per ton. 35 not in stock, I need to purchase. Purchase cost is 380 per ton. So altogether 40 ton at the rate 380 per ton is what I am going to incur. Look at this. Yes, raw material DX which is in regular use. Yes, 40 tons, purchase price is 380, resale cost is 240. In stock, how much is in stock, students? 5 tons is in stock. How much is not in stock? 35 tons is not in stock. So 5 tons which is in stock, I need to replace at the rate 380 per ton. Yes, the item which is not in stock, I need to purchase, replace, one and the same. Again at the rate 380 per ton. So how much I will be incurring, students? 380 into 5, 1900. 35 into 380, 13,300. So all in all, how much is it, students? 15,200. Is it clear? This was for first raw material. Next, let us look at the next raw material. Yes, what is the question telling? Further, with regard to components, we wanted some components as well. It is informed that 4,000 components would be required. Altogether, 4,000 is required. They could be purchased externally for 15 each. Either I can buy it from outside for 15 rupees, or alternatively, they would be supplied by ANZ. I've told Aditya Group has two subsidiaries, AUS and ANZ. So either I can buy it from outside, or AUS or ANZ. ANZ is willing to supply. Now, if ANZ is supplying, how much? Look at this. The variable cost of component, if it was manufactured by ANZ, would be 8 rupee. Yes, variable cost which ANZ is incurring is 8 rupee. If I buy it from outside, I have to pay 15 rupees. ANZ, I am getting it at 8 rupees. What would be the decision? I would have directly purchased from ANZ because I am saving 7 rupees. But look at this. Total, I want 4,000 components. What is the question telling? ANZ has sufficient capacity to produce only 2,500 components. ANZ is having capacity only for 2,500 components. However, in order to make the extra 1,500 components, what ANZ have to do? It has to forego some external sale. It has to sacrifice some external sales, on that the contribution would be lost. So not just the variable cost, the contribution lost should also be considered. So it has to forego external sale of 50,000. 50,000 sale it has to sacrifice, which has a contribution to sales ratio of 40%. On this 50,000, 40% we would have earned as contribution. To have uniformity, it is assumed that company will procure entire requirement either externally or from ANZ. Transfer pricing for Aditya Group promotes goal congruence. Yes, promotes goal congruence. This, what is this sentence meaning? You will get to know that in the chapter transfer pricing. Okay, now wait. But for solving this question, this sentence has no relevance. Yes, the unit selling goods will be allowed to charge any opportunity cost on account of catering to internal demand, while the purchasing unit should ensure that the company is not at loss. So what is it telling? It is telling that, what should be the transfer price? We are transferring internally. What should be the transfer price? If there is any opportunity cost, that opportunity cost will be paying, and additionally whatever is a variable cost we are incurring, that will also be paid. Now look at this, students. Now let us come back here. Yes, altogether how much components are required? 4,000 components are required. Yes, two options are available. Option number 1, buy from outside. What is the cost per unit? 15 rupee per unit. So for 4,000 component, how much I will be incurring at the rate 15 per unit? Option number 1 would be 60,000. Now I have another option as well, that is I can get it from ANZ. Yes, if I am getting it from ANZ, what is the variable cost, students? It is 8 rupee per unit. 8 rupee per unit into 4,000 units, it is going to be 32,000 will be the variable cost. But what is the question telling? For 2,500 units, yes, spare capacity was there. But for the next 1,500 units, spare capacity is not there. So if we produce, if we give the components, we have to sacrifice the external sale. How much external sale we have to sacrifice? 50,000 external sale we have to sacrifice. Yes, so in that, how much contribution I would have otherwise earned? I would have earned a contribution of 40% on 50,000. So what I am telling, 50,000 into 40%. Otherwise, I would have earned 20,000. Now, because I have accepted this order, I cannot earn this 20,000. So this also I will recover from them. So total, how much I want? 32,000. Look at this. ANZ is telling, see, 32,000. I am paying the variable cost for 4,000 units. That I want. Additionally, if this order was not there, I would have made a sale of 50,000, on which I would have earned 40%, 20,000 rupees. That now I am not getting. So that also I want. So 32,000 plus 20,000, I want 52,000 rupees. So ANZ is telling I want 52,000. Now I have two options to purchase the component. Either I can purchase from outside, pay 60,000, or I can get from ANZ, give 52,000. What will I choose? Will I buy from outside? Will I get from ANZ? What is my objective, students? My purchase cost should be maximum or should it be minimum? What will I choose, students? Think and tell me. I'm waiting for your answer, students. Obviously, yes, I'm buying the goods. I will choose the most affordable, lowest cost item. Yes or no? Suppose I'm telling, yes, you want to purchase an item. Yes, there it is available at 60,000. Here it is available at 52,000. Same item. What will you do? You will buy it at 52,000. Yes or no? So, get from ANZ Limited, the relevant cost will be 52,000 rupees. Is it clear, students? Everything is pure logic. Believe me, you need not by heart even a single thing. Everything is just pure logic. Sit, think, you get the answer. As simple as that. Yes, you try complicating the things, it will only take you away from the answer. Just sit, think what the question is trying to tell, you will get the answers automatically. Is it clear? Should we continue? Now, again at 10:45, you got the mail from personnel or HR manager. Yes, what is HR manager telling? It has been informed that 2,000 high-skilled labor hours would be required. Yes, to do this work, 2,000 hours of high-skilled labor is required. The grade of labor required is currently paid 5 rupees per hour. So, at present, we are paying them 5 rupees per hour. Highly skilled labor is in short supply and cannot be increased significantly in the short term. What is the question telling? Yes, it is in short supply. Yes, there is no spare capacity and it cannot be increased also. That means I cannot get casual employees. I cannot tell, okay, I'll get some new casual employees who are highly skilled. No. The labor is presently engaged in meeting the demand of product G, which requires 4 hours of highly skilled labor. Contribution we would be getting was 24 rupees. Yes, just to summarize this, what is this paragraph trying to tell, students? 2,000 hours of highly skilled labor is required. Yes or no? Yes. Am I getting extra? Is my voice clear, students? Is it getting stuck? Okay. I hope my voice is clear now. Was there a small stuck in the voice? I hope it is restored now. Okay, perfect. Okay. So 2,000 hours of labor is required. Yes, labor. We see whether we are using existing employees or new employees. Question is telling we cannot get new employees. So we need to get the work done from existing employees only. We see the existing employees, whether spare capacity is available. Question is telling no, spare capacity is not available. It is in short supply. So what I need to do? Spare capacity is not available. I am sacrificing some external sale. What is the relevant cost, students? What is the relevant cost? It is the wage paid plus the opportunity cost is going to be relevant. Now look at this, altogether 2,000 hours is required. What is the basic wage rate per hour? Basic wage rate I have to pay for my employee per hour is 5 rupees. Per hour basic wage I am paying 5 rupees per hour. Okay, 5 rupee per hour. Yes, what is the opportunity cost? If this work was not there, what they would have done? They would have produced G. Yes, if they produce G, how much they are getting contribution? They get a contribution of 24 rupees. Yes, if they produce 1 unit of G, how much they are getting, students? They are getting 24 rupees contribution. To get this 24 rupees contribution, how many hours my employees should work? They should have worked for 4 hours. That means, can I tell if my skilled employees work for 1 hour, they are earning a contribution of 6 rupees? Yes. Why? Suppose I am an employee, I work for 4 hours, I produce G. Yes, company earns 24 rupees in 4 hours. That means for 1 hour, company is earning 6 rupees. So the relevant cost, wage of 5 rupees per hour is anyways relevant. In addition, 6 rupee per hour. Altogether, it will be 11 rupee per hour into 2000 hours is going to be the relevant cost. Is it clear, students? Any doubts in this one? Yes, so look at this. It is in short supply. We are paying 5 rupee per hour. At present, they are producing G 4 hours per unit, and contribution from 1 unit is going to be 24 rupees. Yes, what is the relevant cost, students? It is the wages paid plus the opportunity cost. And what is the opportunity cost per hour? Opportunity cost per hour. Altogether 24 they are getting from G. It was in 4 hours. That means it is rupees 6 per hour. So based on this, I will do my calculations. Yes, for my employees, he is working for 2000 hours. 2000 hours at the rate 5 per hour. 10,000 will have to be paid. And opportunity cost, what is the opportunity cost? 2000 hours at the rate 6 per hour, 12,000 contribution I have lost, I have sacrificed. So bare minimum I want 22,000 rupees. Is it clear, students? Any doubts here? Should we continue? Yes. Now, continuing. Yes. It has also been informed. It is also been informed that the contract would require a specialist machine. We want a specialized machine. So what we are going to do? The machine could be hired for 15,000. What all we can do? We want a special machine. Either I can hire. If I am hired, how much I have to pay? I have to pay 15,000. Or what I can do? I can purchase. If I am purchasing, how much I need to pay? 50,000. Now at the end of the contract, if the machine was purchased, if I purchased, obviously at the end of the contract, I will sell it. So it could be sold for 30,000 rupees. I purchased, I paid 50,000, I have sold, I got 30,000. What is the net cost, students? 20,000 is a net cost. Alternatively, what is the question telling? If I purchase the machine, option 1, I can sell at the end of it. Or alternatively, it could be modified at a cost of 5,000. I can modify, I can pay 5,000, modify, and then used on other contracts instead of buying another machine. Yes, which would cost 45,000. The operating cost of the machine are payable whether it hires or buys the machine. These costs will be 12,000 for the new contract. So firstly, let us look at the operating cost. Obviously, if I take the decision, yes, I want the machine, either I can hire or buy. But operating cost 12,000 in every case I have to pay. So if I take this offer, 12,000 cost I am incurring, that at least I should recover. So operating cost is going to be relevant. Now let us calculate the relevant cost of the specialized machine. Pay attention, students. Decision, one thing we can write, operating cost of 12,000 is going to be relevant. Now, I have basically two options. What is the first option? I can get it on hire. If I am getting it on hire, how much I have to pay? 15,000 I am paying. Look at this. Assume this is the cash. Yes, if I am getting it on hire, how much I am paying, students? I am paying 15,000 rupees. Yes, clear. Now, second, I have to purchase on my own. If I am purchasing on my own, again, at the end of the life, I have two options. One is I can sell. Yes, for purchase, how much I am paying, students? For purchase, I am paying 50,000. I have paid 50,000 for purchase. At the end of it, if I am reselling, how much I am getting? 30,000 I am getting back. So, what is the net cost? Net cost. What is the net cost, students? Yes, it is 50,000 minus 30,000. The net cost will be 20,000 rupees. Is it clear? Yes. Now, look at the third option, purchase and use for other contracts. Now, what question is telling is, yes, now at point 0, you do one thing, you purchase the machine. Okay. I have purchased the machine. Yes, how much cash I have paid? How much cash I have paid? 50,000 rupees I have paid. Now, use of machine is over. Now I was thinking, should I sell the machine? No, but there is another option. What is that telling is, I can modify it at a cost of 5,000. Yes, so to modify, what I have to do? Yes, originally to purchase I have paid 50,000. Now to modify again I am paying 5,000. So altogether how much I have paid, students, plus modification cost, 5,000 rupees. Altogether I have paid 55,000. But now what is happening is, I can save. Yes, I can use it for another contract. I can use this machine now. Now I have modified this machine. I can use it for another contract. Yes, if this machine was not available, I should have purchased the other machine for which I should have paid 45,000. Look at this. This machine was not there. I should have purchased other machine for which I should have paid 45,000. Now because this machine is there, I need not purchase. So I am saving that 45,000. So what I can tell, if I incur 55,000 here now, I can save the machine acquisition cost of 45,000 rupees. So net how much is the cost, students? Net how much is the cost? Net cost is going to be 55 minus 45, 10,000 rupees. Is it clear? You want me to repeat it again? Yes, look at this. Option number 1, hire, I am paying 15,000. Option number 2, purchase, I have paid 50,000. Resell, I am getting 30,000. Net I have incurred is 20,000. Option number 3, at the time of purchase, I have paid 50,000. Okay. Again for modification, I have paid 5,000. Total, I have paid 55,000. But if I am paying 55,000, I can save the 45,000 which I would have otherwise incurred. So I will tell, even though I have paid 55,000 here, I have saved that 45,000, right? So net cost which I have incurred is just 10,000 rupees. Yes, is it clear? Yes, so the net cost is 10,000 rupees. Now I have 3 options. Yes, assume I have to make a payment. Yes, I have 3 options. Option number 1, I have to pay 15,000. Option number 2, I have to pay 20,000. Option number 3, I have to pay 10,000. Which one will I choose? Do I want to pay maximum or I want to pay minimum? Which one will I choose, students? Yes, 15,000, 20,000 or 10,000. Which one will I choose? I will be choosing lowest of these. Yes or no? Whenever we are paying, we will choose lowest of these. So what is the decision, students? Yes, purchase the machine and modify to use for other contracts. So the relevant cost is going to be 10,000. This is one way in which you can write the answer, or the other way, relevant cost is lower of the 3, higher charges, net cost of purchase, net cost incurred while using it for other contract, 15,000, 20,000, 10,000, lowest of the 3, relevant cost is 10,000, it is when we purchase and modify to use it for other contracts. Is it clear, students? Should we continue? Yes, yes. Next we are proceeding ahead. Yes, such a big question. Yes, next. So about skilled employees we have done. Yes, about machine we have done. Operating cost we have done. Now supervisor. Contract would be supervised by an existing manager who is paid an annual salary of 50,000 and has sufficient capacity to carry out the supervision. What is happening? Existing manager, I am already paying him and he is having sufficient capacity. So what is the relevant cost? Relevant cost is nil. He is not sacrificing anything. I am already paying him annually 50,000. I am telling you, you are free, right? So do this work as well. But now look at this. Manager would receive a bonus of 5,000 for the additional work. Yes, that is why I tell, do not try by hearting the things, because in real life every situation is different. Now look at this. If there is no special order, okay, what we would have done? Yes, manager would be sitting free. Yes, 50,000 anyways per annum now giving. Now if we accept the special order, 50,000 still will be giving. If we accept or not, we have agreed. But now because he is doing this work, extra 5,000 I need to pay. Extra 5,000 I am paying just because he is supervising this work. Is this 5,000 relevant, students? yes, this 5,000 is going to be relevant for us because this is incurred specifically for this contract. So I will tell relevant cost. Yes, existing manager, I can tell the wages is irrelevant as there is sufficient spare capacity, but the additional bonus paid is relevant. So what is the relevant cost, students? It is the bonus paid of 5,000 rupees. Is it clear? Yes. See, I have written it here in the form of points. In examination, what you need to do, convert it into paragraph. That's all. Yes. Supervision is done by an existing manager. Yes, there is sufficient capacity. There is no loss of contribution. So the normal wages paid would be irrelevant. However, we are paying an additional bonus of 5,000, which is paid only for doing this supervision work of the existing contract. So this bonus of 5,000 would be relevant. Therefore, relevant cost is equal to 5,000. Is it clear? Yes. Now, next paragraph, what is question telling? Yes, development time. 15 hours of development time at a cost of 30,000 have look at the sentence, students, have already been worked in determining the resource requirements of the contract. What is this, students? Have already been worked in the past, have already worked, have already incurred 30,000 rupees cost. Is it relevant now to take the decision? I've already incurred 30,000. Now whether I accept the offer, reject the offer, this amount is already over. This is sunk cost. It is irrelevant. Yes, this development cost is sunk cost. It is going to be irrelevant. So the relevant cost is going to be nil. Is it clear? Yes. Going ahead. Yes. Fixed overhead absorption rate. AUS uses an absorption rate of 20 rupees per direct labor hour to absorb existing, to recover its general fixed overhead. Yes, company is incurring general fixed overhead, rent, okay, and all other general cost. So to recover that, we are charging. It is not incurred extra. Just to recover, we are charging it to all the products. So is it relevant, students? No, it is not going to be relevant because there is no incremental cost at all. So is it relevant? It is going to be irrelevant, students. Relevant cost is going to be nil. Yes, this is irrelevant for decision making. Is it clear? Yes. What we need to do? Ultimately, we need to add all the items one by one. Yes, tell me, students, how much, what is the cost for DX? 15,200. Yes, next. Okay, I'll write it here. For components, I will get it from A and Z, 52,000. Next, skilled labor, how much I am incurring for skilled labor? I am incurring 22,000. And for machine, yes, 10,000 I am incurring. Again, operating cost of machine should be 12,000. Next, what else is there? Supervisor, I am paying 5,000. Obviously, development cost and fixed overhead absorption is nil. So let us write it down. Yes, for components, I am paying 52,000. Skilled labor, I have incurred 22,000. Specialist machine, 10,000 is the net cost. Yes, supervisor. Yes, here for the specialist machine, apart from the machine, yes, operating cost is there. Yes or no? This is the machine cost. Operating cost of 12,000 always I have to incur. Again, for supervisor, I am paying bonus of 5,000 rupees. Development cost is not there. Fixed overhead absorption is not there. So total, how much is it, students? It is 1,16,200 rupees. Yes. I have already given all the notes. Yes, above all those A, B, C, D, E. I have written it here. Above notes have been given. in exam, if you want, you can do it this way, or else alternatively, if you want, you can write the paragraphs as well. Raw material DX is already in stock, replacement cost is irrelevant. Component, company has two options. If it purchases from outside, 60,000. If it buys, okay, variable cost of something 40,000 and some 32,000 and contribution loss of 20,000. Company will choose the lowest cost, that is 52,000 is irrelevant. Skilled labor, yes, existing employees have to sacrifice, so wages plus opportunity cost is relevant. Specialist machine, company will choose lowest of the three options. Yes, operating cost, it has to be incurred for the special contract, so it is relevant. Supervisor, additional bonus is going to be relevant, but the normal wage will be irrelevant because spare capacity is available. Development cost, sunk, irrelevant. Fixed overhead absorption, it is just an absorption of existing overhead, irrelevant. As simple as that. Is it clear, students? So the relevant cost is going to be 1,16,200 rupees. Now we will have a look at the question. There is also a second part of the question. What is the second part of the question telling? Discuss two problems that can arise as a result of setting prices using relevant costing. That concept is there in our notes. We will discuss that. But before that, let us see the solution once. Test your knowledge, question number 9. Solution is in page 5.50. Yes, 1,16,200. Exactly same answer. Yes, for everything they've given notes. Yes, the only difference is we've shown it this way. They've written sentences, paragraphs. Okay, believe me, in exam you will not be having time to do such a long paragraph. They're writing every item in the form of a paragraph. See, procurement of 4,000 component. How simple was it? Okay, buy it from outside, 15 rupee into 4,000, 60,000. Get it from here, variable cost how much it is, opportunity cost how much is it. Yes, company will choose lowest of the two, therefore 52,000 is relevant. That much is sufficient. Here they have given, yes, tons of explanation which ultimately will make no sense as well. Yes, examiner will also not read. Examiner is also only looking for these items, 52,000, 60,000. Where is the 60,000? Somewhere 60,000 is there in the last page. Okay, yes. Next, skilled labor. For everything they've given notes. Okay, notes is required, but is it required in the same way? No, you can make it better, you can make it simpler. Ultimately, ICAI wants your keywords, that is all. Okay, now this was the first part of the question, students. Now we have a second part of the question. Yes, for that, just go to our concept notes. Yes. So what the concept is telling, yes, whenever we are taking a decision, yes, decision should be based on relevant cost. Pricing should be based on relevant cost. But if we take a decision based on relevant cost, if we set the price based on relevant cost, we are going to face certain challenges. What challenges are going to be there? Two challenges will be there. One is profit reporting. One more is pricing of future work. What is this profit reporting? Yes. Look at this. How do we take a decision? We are taking a decision only based on relevant cost. Suppose I am telling, look at this, variable cost I am incurring 200 rupees, fixed cost which is absorbed is 300 rupees. So the total cost is going to be 500. Do not write, we will write it properly. Variable cost of 200 is relevant, fixed cost of 300 which is just absorbed cost. My total cost in the books would be 500. But at the time of taking decision, what am I telling? Fixed cost of 300, existing overheads is irrelevant. So my relevant cost is only 200. So if a customer offers me 300 rupees based on relevant costing, I will accept the offer. So while taking a decision, it will be based on relevant cost. But profit reporting, how will profit reporting happen? How will accounting happen? What will be shown in accounts? Accounts, it will show revenue is 300, cost is 500, 200 rupees loss. So what is happening? Yes, so profit reporting could be an issue. So what we are telling is decision would be based on relevant cost, However, profit reporting would be based on normal accounting practices. So the profit shown would be lower, or sometimes there would be even loss. So what we need to do? So in such a scenario, manager will have to then go and explain. CEO won't know all these things. CEO will ask, what is this loss we are having? So we'll have to then go and tell, okay, only this was relevant, this is irrelevant. Give him the stories. Yes, if you are in future working, you will give him stories. If you are going on date, what is relevant, what is irrelevant, then CEO will be correct. So yes, in such a case, profit reporting may be an issue. In books, it may be showing loss, even though the proposal is feasible. So for that, manager will have to go and explain. So what all points we need to write? Look at this, students. Yes, for this, firstly we need to write decision making happens on relevant cost. However, normal accounting will be based on total cost. So profit shown may be less, or there may be even losses, even though the proposal is feasible. Yes, in reality, the proposal is feasible, but our financial statements, our books are not revealing that. So manager might need to explain. Yes, CEO and other people will call manager and ask what you have done. So we have to tell, we'll have to need to explain. Yes, explain the scenarios and action taken, and why it is in the best interest of the company. If you want, you can write so much also. Okay, that is point number one. So what will happen if you take a decision based on relevant cost? If you consider only relevant cost, so in books it may be showing loss, even though in reality it was a profitable option. That is first issue that will happen. So manager will have to go and explain and tell all the things. Second thing what will happen is, yes, this is in the organization. Now outside, you think of it from customer's perspective. This time, okay, I have just quoted the relevant cost. I have just told him. Yes, say for example, I am telling, okay, I had a student who came to me for CA Inter. Okay, CA Inter, he told me, sir, I could not clear for 4 to 5 times, sir, kindly help me. So I told, don't worry, yes, I will just give you the class at the variable cost which I am incurring, that is the cost of books and encryption cost. So I told him, okay, you just give me 2000 rupees sufficient, or 3000 rupees sufficient. Now he came for CA final. Now what is he expecting? Is he willing to give me full amount? Yes, he learned from that. He, yes, uh, he, what do we tell? I am not getting the word. He passed the exam. Yes, pass is such a tricky word. Yes, he passed the exam. Now he has come for CA final. He wants SCMP class. SCMP class is priced at 6000 rupees. Yes, is he willing to pay 6000? He's telling, sir, please, sir, last time you gave me a discount. You just gave it to me at your variable cost. This time also, please do something like that. Yes or no? So in future also, if now we are giving it to customer only at a relevant cost, we are not including fixed overheads, other costs. In future also, customer will expect that we will be keeping the price same. In future, it will be difficult to increase the price. Point number one. Point number two, the cost which may be irrelevant now may be relevant in future. So assume I am undertaking a contract. Yes, in this month, my employees were sitting idle. So I got an offer. Yes, so I thought, anyways, employees are sitting idle. Let me do it off at a small price. But in the next month, employees are working. Yes, so if I have to take that contract, I will have to add the labor cost as well as the opportunity cost. But the customer is not willing. Customer is telling, last time you did it at a low price. Now why you are charging high? Yes, so pricing of future work may be a challenge. Yes, so it may be difficult to increase the prices in the future. Again, if you want, you can write one more thing which is not there in ICAI source. Just I've explained that an item of cost which is irrelevant now may be relevant later on, based on which the cost would change accordingly, the pricing would change, but customer would not be willing to bear that. Yes, now this is what is given. So now let us look at that portion of solution as well. Yes, look at the students. Two main issues arise while pricing work based on relevant cost: profit reporting, pricing of future work. Profit reporting: the decision as to whether to proceed with the work has been based on relevant cost. We take a decision based on relevant cost. However, profit reporting will be based on normal accounting system. First point which we have told. Yes, since it is based on total cost, it is probable, it may happen that cost will be greater than the relevant cost. Consequently, profit will be lesser or there may be even loss. We have discussed. So this may cause difficulties for the manager who accepted the work, as an explanation will be required. So manager will have to explain that what he has done, why he has done, why it was in the best interest of the company. All those things he might have to explain. Second is pricing of future work. Yes. Difficulty lies in increasing the price for similar items for the same customer in future. Point number one, in future we cannot increase the price. Once price is set, customer tend to expect that any future items will be priced similarly. However, where a special price has been offered based on relevant cost because of existence of spare capacity, yes, supplier will not be able to continue the price on that basis, as it does not cover the long-term cost. This time, this period I had my spare capacity, but in long term I did not have my spare capacity. Again, there could be difficulties as other customers are being charged on full cost basis. Yes or no? For my CA Inter student, I gave it at 2000, but for other students, I am charging 4000. If other students came to know that he got it at 2000 rupees, again, there could be a small issue. Yes, that is also another point. Yes, it may feel that they may feel that their loyalty was being penalized. This is an additional point which we can write. Other customers may feel that their loyalty is being penalized. We can write this as well. Yes, other customers may feel their loyalty is being penalized. Is it clear, students? Any doubts? Should we continue? With this, we've finished all questions from our study material from the concept of relevant costing. All the questions from relevant costing are over, but we have two additional questions which are there in our ICAI's additional case study booklet. So let us have a look at those questions as well. With this, the concept would be over and we would be winding our session. So look at this first page. Okay. This is over. These four questions are over. We have understood everything logically, one by one, one by one, one by one. Now we have final two questions. Skill-based assessment question 31 and skill-based assessment question 24. Let us go to them one by one. Skill-based assessment question 31. Yes, let us have a look at the question. Yes, if students are not having the book, you can go search on Google ICAI Final. You will be getting their website there. Go to SCMPE. In study material, there should be additional case study booklet or something like that should be there. Okay, you can download it. It is somewhere of 300 pages. Okay, we'll be solving all the questions from that as well. Don't worry. Yes, question number 31. Yes, Felicity. First, let's see what is required. Yes, comment whether the special project should be accepted or not. Also give a complete analysis of the special project cost based on the principles of relevant costing. We should tell should we accept or not and give a cost based on the relevant costing. When do we accept? If relevant revenue is more than relevant cost, we will accept. Relevant cost is more than relevant revenue, we will reject. As simple as that. So look at this, students. Felicity Limited is a chemical manufacturing company. It has received a special project that needs to be completed in 3 months. Okay, management has to communicate its acceptance or rejection within few days. They have approached you, the management accountant, to work out the costing for this. The following information is available. One by one information is available. We will see if it is relevant. If it is relevant, how much is relevant. Now look at this, students. Financing. The company would require a short-term overdraft of 5 lakh rupees immediately in order to execute the project. Yes, generally what happens? Yes, the price will be given at the end of the project. Now to do the work, we want some funds. If you are not having funds, we'll have to take a short-term borrowing. So we want to borrow 5 lakh rupees immediately. Bank charges are going to be 10% per annum. This overdraft facility will be needed for the duration of the project, that is 3 months, and would be repaid in full at the end of the period. This is a new item, students. Yes, obviously new items could be there, new items would be there. This is CA exam, not any BCom exam. Think and tell what is the relevant cost. What is going to be my relevant cost? Now look at this, students. I'll make things simpler for you. I have not accepted the offer. I have accepted the offer. Yes, look at this. I have not accepted the offer. If I have not accepted the offer, should I take the overdraft? No, overdraft I will not take. If I have not taken the overdraft, should I pay interest? No, I would not be incurring any cost. My cost would be zero. Cost would be zero. But if I accept the offer, what I need to do? I need to get an overdraft of 5 lakh rupees. Now, is this cost? No, this is just a transaction in money. Today I am borrowing 5 lakh rupees. At the end of 3 months, customer will give me the amount, I will return to bank. This is not cost, but what is cost? On 5 lakh, for 3 months, I need to pay interest at the rate 10%. This is my cost. Yes, 5 lakh is not my cost. 5 lakh, yes, is not my cost. It is just an overdraft. It is just a transaction money. Today I am borrowing. At the end of 3 months, whenever the customer will pay, I will give it back. What is my cost? The interest is my cost. What is the interest, students? Yes, 5 lakh into 10% into 3 by 12, it is going to be 12,500. So the interest is going to be cost. Is it clear, students? Any doubts? The interest of 12,500 would be my cost. Yes, financing I want. Yes. Interest cost would be relevant. So how much is it? On 5 lakh, 10%, but 10% is per annum. I want it for 3 months. It is going to be 12,500 rupees. Okay. Now, next, let us continue. Next, what else we want? We also want materials. Felicity has a stock of inventory of 5,000 kg on hand. In our hand, we have 5,000 kg, which is not of immediate use. It is not required immediately. It can be sold as scrap. So I am having 5,000 kg. I am not regularly using. What I was thinking of selling it as scrap. Yes, in the market at the rate 250 per kg. The special project requires 3,000 kg of this inventory, which can be replaced at the current market price of 300 rupees. Now, I am having 5,000 kg. Yes, altogether I want how much kgs for special project? 3,000 kg. Do I have it in stock? Yes, 5,000 kg is in stock. It is in stock. Yes, am I using it regularly? It is not of immediate use, not regularly used. So what I was thinking of selling it as a scrap. The realizable value will be relevant. Realizable value of 250 per kg into 3,000 kg is what is going to be relevant. Is it clear, students? If this offer was not there, I would have sold these 3,000 kg on scrap, got 250 rupees. Now, because I am using, I am not able to get the realizable value. I will get it from the customer. So for raw material, yes, realizable value is relevant. Yes, what is the realizable value, students? For 3,000 kg at the rate, how much is it? It is at the rate 250 per kg, page number 226. Yes, 3000 at the rate 250 per kg, 3000 at the rate 250 per kg, it is going to be 7,50,000 rupees is relevant here. Is it clear, students? Should we continue? Now, next item. Yes, for our SCMP students who are there attending live, yes, while we had given you printout, so we missed out to give you the printout of additional questions from the first two chapters. Okay, first two chapters, that is decision making and divisional transfer pricing. Additional questions we forgot to give it as a PDF, so it may not be available in your question booklet. Don't worry, we'll give it to you separately. Okay, next. Yes, about labor, let's see what is given about labor. All skilled workers currently work full-time in their respective departments. Skilled workers are currently working full-time. There are no idle hours. For this special project, 5 workers would be needed from other departments. They would totally devote 2000 hours of labor time to this project. Cost of labor per hour is 300 rupees. 300 rupees per hour is the cost. Since their working hours have been diverted, the production in other departments cannot be met. Hence, the company would incur a loss of contribution of 1 lakh rupees. So, what all is the relevant cost? Yes, we are getting the work done from existing employees and there is no spare capacity. Yes, that is labor hours is a limiting factor. So, what we have to do? Wages plus the opportunity cost will be relevant. Now, what is the question telling? Alternatively, option number 1 is we can get the work done from existing employees, tell them don't do this work, do this. Or alternatively, company can outsource the labor at a cost of 6,25,000. So we have two options. One, get the work done from existing employees, or two, get it from outsourced employees. Which one do we choose? Wherever cost is minimum is what we'll choose. Management will opt for the more cost effective option as quality of both of them is the same. Okay, now look at this, what we are going to do. Yes, for my labor, two options are going to be there. One is if I have in-house employees. Yes, in-house employees. How much I have to pay for my in-house employee students? I have to be paying them. Yes, wages I will be paying 300 per hour into, space here is not sufficient to do the calculation. Yes, ideally look at the students. Two options are there: in-house employees, outsource the employees. For my in-house employees, how much wages I have to pay to them? I have to pay to them 300 per hour into 2000 hours. I have to be paying them 6 lakh rupees. Yes, what is the opportunity cost I am incurring? Because they are working here, they cannot work on other project. On the other project, how much they could have earned? They could have earned a contribution of, how much is it, students? 1 lakh rupees, which they are sacrificing. So what is the cost? What is the relevant cost? 7 lakh rupees. Now, if you are getting it outsourced, what is the cost we will be incurring, students? Outsourcing cost is going to be 6,25,000. Which one do we choose? If we get it done in-house, 7 lakh we have to spend. Outsourcing, 6,25,000 only. What do we choose? We are going to choose for outsourcing because it is cheaper, it is more effective. In-house is going to be 7 lakh. Outsource is going to be 6,25,000. Whichever is lower, that is 6,25,000 is what we are going to choose. Is it clear, students? Yes. Next, what is given? Yes. Overtime payment will be made to inspection supervisor. We have an inspection supervisor for whom I have to make an overtime payment who checks the final product. Yes, 25,000. There is an inspection supervisor. Yes, he is our permanent employee. Yes, because in the normal hours, he is looking at other works. We are telling, yes, work overtime, I will give you 25,000. So he has to work overtime, and because he is doing this work, we are paying him 25,000. This would be incurred irrespective of whether labor is in-house or outsourced. Whether it is in-house, outsourced, this 25,000 will be incurred. This 25,000 we are paying to supervisor will be relevant. Is it clear, students? Yes. Now, after this, what more is there? Yes, we want a machine as well. Yes, machine X 2.1. Yes, the project would require the use of an existing machine 2.1. Are we buying a new machine for the project? No. Should we pay for the new machine? No. We have an existing machine. We are using that. Depreciation of the machine is 40,000 per annum. Should we charge depreciation on the project, students? Should we charge depreciation on the project? Tell me, students. Should we be charging depreciation on the project? Yes, no. Think of it from the relevant cost perspective. Yes, machine is already purchased. Now whether we accept this offer, we do not accept this offer, depreciation will keep happening yearly. So depreciation will be irrelevant. Is it clear? Yes, so the depreciation is going to be irrelevant, but the variable operating cost for the 3-month period would be 3 lakh rupees. To operate this machine for the 3 months is going to be 3 lakh rupees. Yes, this is going to be relevant. At present, it is operating at full capacity. By diverting it exclusively for the special project, yes, it would cost the company a loss of contribution of 1 lakh rupees. Now, what all is happening, students? Depreciation, irrelevant. Otherwise, also it was there. Now, to work it for 3 months, 3 lakh rupees I have to pay. That is going to be relevant. Again, because I am using it for this project, I cannot use it for other project. From other project, I could have earned 1 lakh. That now I am not earning. That opportunity cost is also going to be relevant. So what is the total relevant cost, students? It is going to be 3 lakh plus 1 lakh. We will tell the variable operating cost is incurred specifically for the contract, so it is relevant. Because company is sacrificing a contribution of 1 lakh rupees, the opportunity cost would also be relevant. So the total relevant cost is going to be 4 lakh rupees. Is it clear? Yes, depreciation is not relevant, it is irrelevant. Yes, operating cost is going to be 3 lakh rupees, contribution loss is going to be 1 lakh rupees. Till here things are clear? Yes, now let us come back. Yes, after that, okay. Administration overheads, things are given about administration overheads. Administration overheads include apportionment cost of 25,000. What is 25,000? It is apportionment. I am just distributing. Existing cost I am distributing. Is it relevant? No, it is not relevant. However, there is an incremental cost incurred specifically 10,000. This 10,000 will be relevant. Yes or no, students? This is incurred only if I accept the project. So this 10,000 is going to be relevant. Total revenue that we can earn from the project is going to be 20 lakh rupees. So we should tell whether the special project should be accepted or not. What is the administration overheads that is relevant, students? 10,000 is going to be relevant. So what is the total relevant cost, students? Tell me the total relevant cost. For raw material, it is not 1,12,500, it is just 12,500. So now 5 lakh 10% into 3 by 12, 12,500. 12,500 plus 7 lakh 50,000 plus 6 lakh 25,000 plus 25,000 plus 3 lakh plus 1 lakh plus 10,000. Relevant cost specifically for the contract, how much we are incurring? 18 lakh 22,500. As against that, if we incur 18 lakh 22,500, how much revenue we will get? 20 lakh rupees. So what is the net benefit we will get, students? Net benefit is going to be rupees 1,77,500. Is it clear? Yes. So what is the comment going to be? Yes. If we accept the special order, we will have a net benefit of rupees 1,77,500. So the special order should be accepted. Yes, at this point the answer is ending. If you want, you can write. However, while we are calculating, yes, pricing based on relevant cost, there could be two issues. What are the two issues, students? Yes, pricing of future work as well as profit reporting, PP. Profit reporting, pricing of future work could be the two challenges. Is it clear, students? It is 9:20. We have one final question left. Firstly, let us look at the answer here given. Yes, special price cost. See, they have done the workings here itself. 12,500, 7,50,000. Okay, outsourced. We are going to outsource. Okay, 3 lakh, 1 lakh contribution loss. Same thing, 10,000. So 18,22,500. This is the total cost. Revenue will be 20 lakhs. So therefore, we have a surplus of 1,77,500. Therefore, the project should be accepted. Okay, notes are also given. Notes is just the calculation. See, such a long notes are there. Yes, believe me, you do not have marks for the notes. Yes, you do not have marks for the notes, but does that mean you should not write the notes? No, you should be writing the notes, but your notes should be short, crisp, to the point. Examiner should know that you have written the notes, but you should not keep writing pages, paragraphs. This question could come for 10 marks. Okay, if you keep writing notes, it will take you 1 hour. See how short, in such a small handwriting of ICAI, it is taking 2-3 pages just for the notes. Okay, so we have one final question. Should we do it today or should we do it tomorrow, students? Tell me. Yes, let us do one thing. Let us revise this. Okay, let us revise whatever we have done till now. Okay, one question is pending. We will do it separately. Okay, in the upcoming session we will do it. We will have a separate session, a homework session, wherein this question will be taken care of. Don't worry. Okay, so what is our duty now? Before we end the session, what should we do, students? For one final time, this concept we need to revise it. Yes or no? So let's go back. Yes, okay. Yes. So let us quickly revise, students. Yes, we are discussing the concept of relevant costing. What is relevant cost? It is the cost which is relevant to take a decision. That is, it is incurred only if we take the decision. Otherwise, that cost is not incurred. Two conditions. Firstly, it should be a future cost. Second, it should be a differential cost. It should be different for different alternatives. Yes, we had looked at 4 items. Firstly, we've told historic cost, sunk cost, committed cost, already incurred in the past, irrelevant. Next, we have told fixed overheads. If we have existing fixed overheads allocated, absorbed, recovered, it is irrelevant. But additional fixed overheads, extra fixed overheads, specific fixed overheads, relevant. Opportunity cost, always relevant. Out of pocket cost, additional cost, always relevant. Next, we looked at the items one by one. Firstly, we have told relevant cost for material. For material, we saw, yes, whether material is in stock or it is not in stock. If it is not in stock, we should purchase. So purchase cost will be relevant. If it is in stock, we will ask, is it regularly used? If it is regularly used, we need to replace. So replacement cost is relevant. If it is not regularly used, then we will tell either the realizable value or benefit from alternate use, whichever is higher will be relevant. Yes, additional notes we have told. Firstly, purchase cost, replacement cost are used interchangeably. Next, we have told to replace for raw material which is not regularly used. If we are incurring cost of disposal, generally we will be getting the realizable value. But now here we are incurring the cost to dispose. That should be reduced while we calculate the relevant cost. That was with respect to material. Next, we went to labor. Yes, labor, either it could be existing employees or new employees, additional employees, casual employees, temporary employees. New employees, whatever wages I am going to pay will be relevant. Existing employees, I ask whether there is a spare capacity. If there is a spare capacity, irrelevant. If there is no spare capacity, then whatever is the wages plus the opportunity cost is going to be relevant. Clear? Next, we have overheads. In overheads, variable overheads, always relevant. Fixed overheads, we tell fixed overheads. Yes, is it existing, absorbed fixed overheads? Irrelevant. Additional fixed overhead, going to be relevant. And the final point we had discussed was machine. Yes, if we have to buy a machine, we have two options, either get it on rent or buy. Yes, so buying, yes, the moment we buy, we have to pay the amount, but when we sell, we get some scrap value. So we want the net cost of buying. What do we choose? Yes, it is the higher cost or the net cost of buying. Whichever is lower is what we are going to choose. Yes, with this all points we have discussed. Two issues, two challenges. This is required for you to write down the comment. It could be asked as a theory question at the end of the calculation. Two challenges which could be faced while pricing is based on relevant costing. Two challenges. What are the two challenges, students? Tell me. One is profit reporting, one more is pricing of future work. Profit reporting, decisions are based on relevant costing. However, accounting, profit calculation is based on normal accounting data. So, even though the project is financially feasible, it may be showing lower profit or showing a loss. So, manager will have to go and explain. Point number one. Next, pricing of future work. Even in the future, customer will expect that the price should be kept lower. Point number one. Second, the normal customers may feel that they are being penalized for their loyalty. These are the points. With this, the concept is over. I hope you have enjoyed the session. We have solved so many questions. Go back home, solve all these questions, have a look at all these questions again, revise the concept, students, and see you guys tomorrow with even more energy for our next concept. Thank you so much, students. Keep studying, keep smiling, keep rocking, and see you guys tomorrow for our next session.